Good morning, everyone. Thank you for coming. Before we get started, could I get a quick round of applause for Kurt and his amazing team for putting on this wonderful event? Not only is the caliber of people truly exciting, and the venue obviously very unique and inspiring, I just love Kurt's vision for this space and how inclusive that he is. He's, giving out free tickets. He's ensuring that he keeps his costs low so that it can be more open to a wide range of people. And the past couple events that he's put on that we participated in, I think have been just at a totally different level than some of the other events that seem to be put on more for money. And I think the caliber of speaker that Kurt has started to attract, people like Naval from Angel Est and Mohammed Yuniz, Nassim Taleb, it's pretty impressive. It's truly humbling, actually, being part of an event and being up on a stage that those incredible thought leaders and visionaries, really, of our generation are going to be on later today and tomorrow. So thank you, Kurt, for everything that you're doing to build the space, and also for all of you for making the trek here, putting up your capital to come and connect with people, giving up time with family and friends. It really does mean a lot to have so many awesome people in one space. And I think that's really what is most exciting to me about the blockchain movement that is going on right now. It's the people and the passion that they have to truly change the world for the better. And I think you're going to see that today and throughout the course of the event, just how really driven everybody is to create change and to bring about a better world for everybody. So I am the founder of Presearch. We are building a community-driven next-generation search engine. And I'm really happy and excited to be here. It's an interesting time. I think we got a really good taste late last year of what is to come for this space. It was, the opportunity for us all, I think, to see the momentum that can be built and the progress that can be made in a short period of time. And even though things have, had some ups and downs, I think that it really set the bar for where we can go as a group. And now we've got a lot of hard work to do, and the great thing is that we've got a lot of people who are extremely capable, visionaries, who are coming together to help make this happen. So really excited to be here. So Presearch is a project that we've been working on for a number of years. Last year we did a token sale, and we launched the project in beta form. For some background, how we kind of came to this space, I have another company called shopcity.com that's more in the local search space. We provide local communities with their own basic Amazon.com-like marketplace and a way to connect with local businesses. And in 2011, we ran into a bit of an issue with Google. Woke up one morning and almost all of our Google traffic had disappeared. We didn't know why it happened. We didn't know what was going on. We just knew that there were a lot less people that were visiting our sites. And in the process of trying to rectify the situation, we realized that this company, this monolithic company, had this really huge wall around it, and it was almost impossible to really connect with anybody there, and that it was done intentionally. It took us months to finally get a resolution with Google. We were covered in the Associated Press and Bloomberg and a bunch of different media outlets, and ended up participating in a Senate investigation with the FTC into potential anti-fraud, anti-abuse. Too funny. That's what's on my mind, because we're dealing with that a lot with our token, which I'll talk about a little later. Antitrust, actually, issues. And in that experience, we really just realized how much market power Google has. And so some of the numbers. Google controls 96% of all search market share. That is massive. That is probably the most centralized entity and the most centralized force on the planet. Not only do they have the #1 search engine, they have obviously Android, the #1 operating system for mobile. They also have Chrome, the #1 browser, YouTube, the #1 video site, Gmail, the #1 email client, and the list goes on. Google Maps, Waze. It's unprecedented, really, just how much market power and how much control this one entity has. And so the genesis for pre-search was really kind of a vision and a thought, creating more of a level playing field that the rest of us could really operate within. Because although Google originally created no content and their mission was to get people off of Google as quickly as possible, they were all about the 10 blue links and trying to connect you with resources that were outside. That's really changed, and they have started to swallow up entire industries, entire opportunities, and really anybody who's in the information space, which is really almost everybody, obviously connecting with new people to learn about our projects, connecting with anybody really who's in a research kind of process is incredibly important, and they really control the top of that funnel. And so we thought, you know, maybe there's a way potentially that we could leverage Google and we could build something that is a little bit more fair, equitable, and open source, something that the community can really participate in more than the current search environment. And so we started thinking about kind of this landscape that originally we conceived of as like the Switzerland of search, and trying to basically enable all different search providers, because Google isn't the only one. Again, originally they created no actual content. Google was really just a resource that was a fast way to find things. It was actually the other entities within the ecosystem that were really doing the content creation, and that were you know, the ones that were having the relationships with people, both producers and consumers. And so we created a pretty basic version, and we started using it internally, and it was really kind of a bit of a hack more for power users on the internet. So people that are searching different databases directly. So Google is kind of like vanilla search is how we think about it. They, you know, have a whole bunch of different hooks, obviously, and there's a lot of different you know, options within Google, but generally you're getting kind of the same format, and it's done, you know, with their closed algorithm that none of us really know much about, and it's done in a way that is, you know, not really transparent. And so we started, you know, looking at, okay, people are doing domain name lookups. Now, in particular, they're doing cryptocurrency searches, whether it's on CoinMarketCap or if they're, you know, looking up an address on Etherscan. You know, if you're in the law field, maybe you're looking, you know, FindLaw. And so there are all these different resources, and a lot of the time people actually know which resource they want to access, and they still end up going through Google to access them because it's you know, the fastest. We thought, well, what if we had more of a federated search field, something that enabled all these different participants to basically be a provider within an ecosystem and access the people who utilize that search field directly. So that was the initial version, pretty basic search field, and then a whole bunch of logos below it. It's similar in its current form today, although more advanced. If you can, take a look at presearch.org. You can get an idea of kind of what the model looks like. But we've got a search field, and then we have a bunch of different icons below it. So you can go in, you can customize. Do you want to use Google, DuckDuckGo, Bing, any of the privacy search engines that are out there, as well as any of the other resources that you might commonly access. And you get an icon basically below the search field for each of those. If you run your search by default, it'll go to your default provider, or you can easily now choose another provider that you can search directly. And so we started looking at, you know, how would we go to market with this, and obviously everybody's pretty happy with Google. They're doing a pretty fantastic job. How is it possible that we could even make any inroads? Plenty of people have tried. Billions of dollars have been spent. and it really, you know, has not happened in any substantial way. So we thought, you know, we leverage Google. We'll use them as the default provider within the ecosystem. They provide generally pretty fantastic results, but we'll add value on top of it. And maybe if we start incentivizing people with tokens so that when they run a search through pre-search, they'll earn a token. And so we developed the model for it. We released a white paper last year. We did a token sale, brought in $16 million, and launched an alpha on November 9th of last year. And the response was phenomenal. We had you know, sticky rates similar to like a Facebook or a Google-like product. Yes. So of people that were signing up, 30% were continuing to be daily active users. That's a pretty huge number. And so we've kind of looked at how we can go to the next leg now. In the past 5 months, we went from about 20,000 beta testers to over 500,000. It's really blown up. We do have a tremendous you know, challenge as far as anti-fraud, anti-abuse, people who are trying to earn tokens illegitimately, but we're making some awesome progress on that. And really, what we're now setting up for is this kind of environment that all these different providers can participate in. So what we have done on the next level is an actual search engine. And this is really more of the long-term vision. This is going to take, you know, potentially years to build out, although with the way that it's being developed, open source, all API-based, we envision that we're going to be able to have a team of thousands of developers building this out simultaneously from all over the world. And so we may make more significant progress even faster than we anticipate. But really, the vision for this search engine is more of a framework on our end. So providing a way for people all over the world to actually participate, contribute, and monetize their work. So there are universities all over the world. They have computer science departments. They have algorithms that they've developed that are proprietary or open source that are potentially, you know, competing and possibly even better than some of the algorithms that are used by Google, but they don't have a way to actually monetize them or get traffic for them. Well, this is a way that they can plug in their algorithm. We have subject matter experts from all different fields who are out there curating information, creating content. This is a way to basically enable them to contribute that information and again be rewarded and monetize their information. It's a way for the community to participate and vote and upvote, downvote different content. There are basically all these different layers throughout the ecosystem that enable people to be aligned. What we're building really is actually something called a coordination market. So we're not trying to build the actual framework that will organize everybody. We're trying to build the framework to enable people to organize themselves, which is a totally different level, a totally different thing, and it's very powerful. So the ultimate vision for pre-search would be an open source search engine. You can look under the hood. Maybe you're not technical, but you can trust that somebody out there is. They have looked at things. They can ensure that there aren't any native biases, which is almost impossible, truthfully. So maybe it won't be that there are no biases, but maybe the bias will be known and it will be upfront instead of it is. It might be a way that you could choose who you actually work with. So maybe there are different indexes, maybe there are different crawlers, maybe there are different you know, curated information collections, and they are created by people that you actually want to support. So you choose who you're supporting through this ecosystem. To give you an idea of how big this opportunity is, obviously everybody's familiar with Google. It's over $100 billion a year in revenue. They are spending as much money as they possibly can on everything, people, any project that they can come up with, and they're still profiting, you know, $20 million plus every single day. That's how big the opportunity is. Those resources are being extracted from communities all over the world and funneled into the coffers of one entity, what if it was a more distributed system where some of those resources were not being funneled, but were instead being channeled back out to the rest of the world, to all the participants within the ecosystem. So that's what we're working to build. There's a lot of technology involved. We're basically trying to get kind of the alpha and the beta version of all the different components that are required out there into a system that works. We're all about the user experience, and we're really starting from more of a centralized perspective, and then we are decentralizing the technology as we can. And then we're creating that model where others will be able to step in, create the technology, all the different facets of the platform, and again, give them a way so that they can participate to earn and to learn as they participate. We see that there's a really big opportunity, obviously, on mobile, potentially a way to change the search paradigm a little bit. Again, a lot of the time, it's not just Google that you want to actually access. It's the end destination, which in a lot of cases on mobile might be an app. Well, Google is really not an app search engine. They're also generally not a voice search engine. Amazon Alexa has really taken up a lot of attention in the past couple of years. More and more people are using voice. And we see that there's a really big opportunity to leverage voice to enable people to access the resources that they want while they're on the go more easily. So we do have an alpha version of a pre-search app. It is in the App Store. It's only on iOS right now. If you check it out, there is an invite code. You can come up and see anybody from pre-search, myself. There's some people, Shannon, Jeff at the front. We'll be here for the rest of the event. Would love to walk you through it and talk about it and get your feedback. But overall, we see that there are ways that we can really make some inroads into the search space that has been dominated for 20 years by one company that is controlling a massive swath of the internet. And we think that through the blockchain opportunity, we can create a more equitable and a more distributed landscape that everybody can participate in and know what they're getting into, not have the rules changed on them after the fact, and ensure that what we are creating on this amazing resource called the internet is really more distributed and fair and out there in a way that enables all of us to be producers and not just consumers. So thanks again for the opportunity. Looking forward to talking with anybody who is interested in the project. Check out presearch.org if you get a chance.
Yeah,
and
like a wall that rotated
have a great day.
for the bar to come out next to it. It was like unbelievable. It was like crazy. So that was the most interesting one. Like, but you just don't know until you show up, right? It was so cool.
Thank you.
Well done.
Thank you. Thanks so much, man. Appreciate your help. Yeah, I'll take that off.
Every now and then they'll not tweet it, but they'll send it on Telegram, and I'm like, oh, how can I delete that sequence? All right, well, I'll just give you the quick rundown so that you guys are not confused. Wi-Fi.
We went
Last
through a
time
little bit
Wi-Fi
this
was not
morning,
working.
But did you see?
This
the
time we're
slides I
trying to
sent
make it
around, just
work.
kinda how
So
the thing,
if you open up your Wi-Fi, it'll say BLOCKCON.
Yeah, just the
There's a
conversation
splash
threads
page
that
that'll come up
pretty
which
much
has the
everybody.
password on it. So if you can't find the Wi-Fi, that's what it is. So you guys are more than welcome to use it.
Bring it.
There is no parking in this venue, so just keep that in mind for the next 2 days that you're driving out here. There's another event happening at Barker Center, so all parking in Santa Monica, at least on this street, is taken. And it's up to Santa Monica City to tell us where we can park. So unfortunately, that's South Lot 4. So if you look on the map, it tells you where to park.
From a security framework.
And that's that.
The different, as you're designing these different
We
token
will
models,
continue
impact
with the
and
next
valuations, obviously,
presenter, Ryan. And if you have any questions,
for
we have the
story
Telegram
reasons or
group
value
going,
the
which
company
is
afterwards.
t.me BLOCKCON.
We talked about that.
So I'll try to answer as many questions as possible, or criticisms, or accolades. I'll happily take all of them.
It's not just
let me know, and we'll try to get you the best possible experience. And by the way, there's samosas out there. Don't be shy. It's not going to give you, you know, I know it looks odd. You may not have tried it before, but that's samosa. It's got potatoes inside. And then we have aloo paratha, which is tortillas with potatoes, stuffed potatoes inside. So don't be shy, take it. Yeah. And then somewhere around 12:30, 12-ish, we'll have the chicken masala and lots of.
Able to say I'm the only one.
Does that sound good?
Because I thought you would have.
All right, let me invite Ryan up on the stage.
NorCal version of that.
Yeah. I'm the only one without a shirt. I guess I can say that. Yeah.
We all could have worn the Suku t-shirts.
Yeah. Yeah.
Hi everyone. I'm Ryan. I am the CEO of CoinPlan. We are a cryptocurrency wealth management platform, and we enable the average person to one-click invest into a diversified and managed cryptocurrency portfolio. I'm here to talk about ETFs, Bitcoin, the historic rise in 2017, and where CoinPlan fits into the mix. ETFs really worked well from the early 1990s to today because they were consumer focused. And for those in the room who invest in ETFs, they're really nice because of the low fees they offer and the added diversification. You don't have to go pick every stock you want in a specific sector. You can simply buy one and have them all.
One here you can.
In cryptocurrency today, we don't have that all.
Thank you.
We have to go to Binance, Bittrex, different exchanges, buy every coin at once until we're happy with a portfolio. Then if we want to change our portfolio, it becomes kind of nerve-wracking. So we're looking to create a consumer product that really can enable the individual to have a one-click investment into a portfolio that they don't have to worry about, similar to an ETF. And that historic rise, we see the similar comparison to Bitcoin. What really drove that ETF market was the consumer focus. If you compare it to the size of the cryptocurrency market in total right now, we're really only in the early 2000s. And when new ETFs came out that were driven to the average investor in different sectors, the 11 financial sectors that we see today, we really saw a meteoric rise. And the growth hasn't slowed. And this is something we're here to see in the cryptocurrency market as a whole, whether it's Bitcoin itself or the new security tokens that will be coming out. As we look to be more consumer focused, as Bitcoin ETFs start coming out, we're really going to start to see this trend of consumers adopting the blockchain, adopting Bitcoin, wanting to invest, and wanting to have at least a small portion of their portfolio in digital assets. But over time, we really look to see that 20-year growth where every asset is digital. Every security is digital.
Didn't have my coffee yet.
Every stock you buy, where the betterment of today is trading stocks, we're going to be trading security tokens and investing into portfolios that have private equity, that have venture capital, many different passive income plays that today couldn't be accessible to the average consumer.
I feel like one thing leads to another.
What we're bringing are cryptocurrency bundles today. Here you can see a bundle of 10 different coins. With one click, an average consumer can invest into it. There's some really cool bundles that have been put out by different thought leaders, different indexes. Bloomberg put out the Bloomberg Galaxy Index in May. The Chinese bundle had come out also around that time. They select 30 different cryptos that they appoint as the top cryptocurrencies, and they rebalance it every month. Right now, there's no easy way to invest in it, and that's what we're bringing forth. What we're doing that's pretty cool is starting to take these different sectors in the cryptocurrency space and segment them out. Start thinking about dApp coins, privacy coins, platform coins. What if you can invest in the healthcare projects in the cryptocurrency space? Right now, they might be utility tokens, but hey, in the future, they're going to be securities. They're going to be real equity in startups that every investor in the world can have access to.
I want to try.
So as we start building out these diversified portfolios, we start taking into effect what different sectors in the crypto space can do. And then as crypto matures and the volatility starts to starts to lower and the correlation to Bitcoin isn't necessarily there, we can really see an institutional grade cryptocurrency portfolio of digital assets that the average consumer can one-click invest into. It wasn't an engine, it was a kick. We saw Coinbase put out the cryptocurrency bundle.
So
if
then,
you guys have been following the news, that came out
there's one
2
mall in
weeks
San
ago.
Francisco where the high school kids
it's market
gather
cap
them
based
at night
right now.
and take them back
you can one-click
and like
invest,
charge them
but you're
and
really
maintain
getting
all
into
the stuff. So it's actually kind of cool because it
Bitcoin,
gives the
handful of
kids a job.
Ethereum, Litecoin, and down the
big
list.
macro things that's happening
What
here
is really
the
interesting
gig
about
economy.
crypto in
We're
general
gonna earn money
is
for
the
so
top
many
100.
different things.
Yeah.
It's almost like venture capital betting right now.
Which is good.
If you were to bet on the
And then
top
it,
100
you know, could
coins,
inspire,
you would have outperformed the
sort of
market,
maintenance,
which
technical,
we
or
consider to be
entrepreneurism or
Bitcoin,
whatever it
by
is.
10,000%
It's true.
in 2017. And it's not because every coin outperformed.
those
It's
things
because
have to
there
be
were a handful of
maintained.
coins, just like venture capital, a
It's
handful of
always-
startups in their bucket that significantly outperformed the majority of the others who died out. And I think right now in the market, we're at a great point to start looking at
Oh, shoot.
different sectors, different industries. Because while we may not be able to lower risk today in the cryptocurrency market,
ride them downhill.
we can look to seek higher alpha, as there will be one coin in a
there's no
specific
topography?
sector that really takes off. And we've seen different correlations across different months. Bitwise themselves, they have the Hold 10
You could do the
play
manual,
on HODL,
right?
if you're
Like a
familiar with
skateboard?
that term, where they
Really?
actually started laying out different correlations
feature,
between different
just free will?
cryptocurrencies. They started looking at each month, how do the top 10 coins perform? And you can tell that it's different every single month, which coin performs the best. So we're seeing idiosyncratic movements in this space because it's so new, it's so early, but with time we're going to start seeing interesting plays where you'll have a negative correlation to Bitcoin that isn't just a derivative
Always
product.
good.
And
always
just
under
to give you
control.
guys some taste, some flavor of what we're bringing to the table, a lot of people think of crypto as Bitcoin. That guy in the top left corner.
Live
This is a
tweet.
crypto
So we
periodic
should be
table
really
that went
provocative.
viral a few months ago.
Say some crazy
and you
shit.
can start seeing these different segments being formed. You see the payments and currencies on the left,
No, that's for-
protocols and exchanges on the right, fintech, business enterprise, cloud computing. We're in the internet of the early 2000s, maybe even the 1990s. And as this market starts to mature, some of these, or maybe even newcomers, are going to be the Facebook, the Amazon, the Google of 20 years from now. And we're facing an even bigger market. We're facing fintech. We're facing real estate. We're looking at private equity. These are trillion-dollar markets that will be disrupted by blockchain, digital assets, and securities. If you'd like to invest into a diversified and managed portfolio, check us out at coinplan.io. If you'd like to partner with us, we're looking for partners. I'm Ryan at coinplan.io. And to everyone, invest in Bitcoin and buy a diversified portfolio.
That company?
Thank you.
Presenting?
The guy is familiar.
Looks like you should, right?
Yeah.
Yeah, they do.
Thank you, Ryan. The next panel is with Deloitte, Rob Massey, Lowell Ness from Perkins Coie, Neil Thakur from Technos,
Thanks, good job.
and Stan Miroshnik from Element Group. Now, this is one of my favorite panels, and I'll tell you why. If you're trying to do an ICO, or if you're doing any kind of crowdfunding, there are certain things that happen, and these things change every 3 months. So whatever you did in January of this year is out the door. April, out the door. Cayman used to be the preferred place for jurisdiction, but now people are like moving to other jurisdictions. So this is something that I really invite them every time we have a conference to come up and discuss the current ways of doing certain things and not the best things to do certain crowdfunding mechanisms. So I'll let Rob take over. Which side are you going to take, Rob? Okay, that's perfectly fine. So I'll let you take over from you. If you need something to relax, shot of vodka, let me know. I'll go grab something.
Yeah.
All right. Thank you. Let me go get you.
My name is Rob Massey. I am a tax partner at Deloitte. We serve throughout this space, throughout the cryptocurrency blockchain ecosystem, have done so for almost 6 years now, which is pretty cool to see the evolution. Great conference. Thank you for having us. What we did this morning is we said, hey, why don't we go through some of the challenges and the opportunities. This is not us, but maybe we'll we can find our deck. What we thought we'd do is talk through some of the challenges and opportunities that we have seen over time as people are tokenizing their business models, and put different lenses on it. Put a legal lens with securities law, put a marketing lens as you're going to market and testing out your value proposition. We can talk about valuations and all different lenses. So with us is one, really a team, right? And so we all work together in different settings among clients, but in this particular setting, we have one of our clients, Eric Pascini of Citizens Reserve, a former partner of mine, which is pretty cool to have him here. But maybe just a quick round of introductions so we can level set, and then we'll get into it a little bit. Eric, you want to kick us out?
Yeah, sure. Am I on? Yeah. Good morning, Eric Pascini. I'm the CEO of Citizens Reserve. I used to be at Deloitte with Rob and running the blockchain platform and blockchain practice. And now we are building a supply chain solution on blockchain.
Great. Thanks, Eric. Neil?
Hi, I'm Neil Tekor. We work with Technos Associates. We're a valuation advisory firm. We work in the technology space, and I head our crypto and blockchain group.
Great. Thanks, Neil. Stan?
Hi, everybody. Stan Moroshnik. I run the Element Group, which is based right here in Santa Monica. We're an investment bank. I work closely with clients in their public token financings.
And I'm Lowell Ness. I'm a corporate and securities partner at Perkins Coie, and work on a lot of these matters on a daily basis.
Great. Thanks. And what's important is we all have different lenses in the ecosystem. Collaboration is key, because as you're going through and designing a business model, it is not just about a fundraise. It is about what does the long-term model look like. And you're not going to get there playing the go-between if you're an entrepreneur, being in the middle of all of your providers, all the different lenses, and trying to do the right thing. This is complicated. And so getting us in the room, and we've done so for a long time, it's actually been a lot of fun. I think we've gotten a better result by showing up live. But we've seen a lot of evolution, right? We've gone from the time of, oh, let's just get out there and sell something. We'll kind of figure it out. And it's got some utility. Sounds pretty good. We've seen a lot of evolution in the regulatory environment. From a marketing standpoint, what do buyers want? What do investors want? What are the rights and obligations they want in a token? We have seen valuations, right? Different methodologies. We've seen those valuations tested with different lens. And importantly, we've seen business models evolve and change. And so maybe we can start off with asking the general question as we're thinking about a business model and you're debating, okay, there's a token element. It has a place in the business. It interacts with the model. We're hearing from buyers that they like what it does. They believe in the token, but they sort of feel like an equity component may feel pretty good. There could be tokens designed with rights akin to debt, right? We call them securities sometimes. That's a broad definition. So maybe if we can each reflect upon what we've seen in the past, what are those challenges? What is the market doing today? How are we thinking about it? And I don't know, Stan, you've seen this for a long time. You want to just set the stage and maybe current state and how that's different from the past?
Yeah, absolutely. I think we kind of have had a dichotomy of security tokens versus utility commodity product tokens for a long time, and I think that's getting much more nuanced as we kind of advance in the understanding of the regulatory landscape here and abroad, and as we kind of perfect what we think is a utility and what a utility should look like. And so the debates we're having now in, let's say, the utility to commodity space is, the token is something that must have fundamental programmatic use in an ecosystem. Or is it just a financing mechanism? And so when we, from an investment bank perspective, work with clients, we think about, okay, if this is a purely finance exercise and you're essentially pre-funding through a revenue financing mechanism, let's explore the various options you have in the security token realm. Let's talk about tokens that deliver yield to investors, tokens that deliver other tokens through dual token structures to investors. Let's talk about tokenizing the cap table. Let's talk about a debt-like mechanism. Let's talk about creating something that feels very much like other instruments we've had, but is more robust and is addressing a potentially different investor, LP, buyer universe globally. When we talk about instruments that are fundamental to how the business is built, so when we talk about tokens that have programmatic use that enable functions in the ecosystem, tokens that have staking, tokens that have bonding features, tokens, systems where we have nodes and other operators in an ecosystem where a token is used to incentivize the fundamental function. That almost always has to exist in a framework where that token is not considered a security. And I'll hand that over to Lowell in a second. But working through the business model, figuring out how that token's really going to function, how it's going to deliver value, how that value is separate from the value in the cap table is delivered to equity holders. Those are kind of the core issues that we often struggle with and work through with the companies, and also modeling out those economics as to what is actually delivered to the buyers or the investors. There's a whole big regulatory layer, so I'll hand it over to Lowell for a second, just kind of shed some light on things.
Well, yeah, I think the whole dichotomy between security token and utility token is something that people don't generally understand, and it's one of the first questions I get on when I'm talking to a new team that is thinking about a token strategy. And the question is usually, hey, should we do a security token? Because we kind of hear like utility tokens are not so great, and maybe we should be doing a security token, and they don't really understand what that even means. And I think as Stan is saying, you really have to decide what your end game is. What is the ultimate use concept for this token? Is it intended to be used in a network as a non-security and have sort of a robust liquid trading value? What blockchain really represents is the ability to trade value, where the internet was sort of trading information. Now we're trading value. You have to have robust secondary markets to do that, but you got to navigate the securities laws very carefully to deal with that fact. And so a lot of people are just kind of coming to me with this idea, well, we should just do a security token. But a true security token, to me, something that is a true non-mutable security, has what I'll call a native financial return, something that the project is going to throw off, whether we call it equity or whether we call it debt. There's a financial return to the holder of that token coming from, you're going to pay money to this token holder over time. And if that's part of your business plan, great. But in a lot of cases, it's not intended to be, and you really do want a liquid token to be used as a form of currency or a payment rail for a network. So you got to think about your end game before you really decide between security token and utility token.
Yeah, and Rob, maybe I can add something. I think, so how many of you are startups or entrepreneurs in the room? So my recommendation to you is do not let the investors tell you whether you're a utility token or a security token. Because at the end of the day, that's what some people try to tell you, right? When you're in token sale and you go and you try to sell either a security or a utility token, they're going to tell you, why don't you do a security token? And it shouldn't be happening, because your business model is based on whether you're a utility token and a security token, and you cannot be both at once, or you have to have two different tokens. But your business model is your foundation, not the discussion you're going to have with an investor about whether you're a security or a utility token. To me, that's super important.
Yeah, it's interesting, right? Because you were on the advisory side for a long time, and then we switched over, and now you're planning, and you're testing these theories, right? But you're feeling the pressure, I think, being out in the market, talking about your product, and staying true to your model, making sure that it fits, right? This is not just a fundraising exercise, right? There's life beyond the fundraise. You got to stay true to what that is.
Exactly.
But there are pressures as you decide what the token represents. Yeah. Right? So maybe, Neil, do you want to comment? Because we talk about from a valuation standpoint, right? We talk about tokens, and there's sometimes a compensatory element that happens when companies give tokens to employees or founders or advisors. And so maybe some pressures around as we attach rights and obligations to the token, as we navigate, whether it's a security, it has utility. What does that feel like from a valuation standpoint?
Yeah, so it has a lot of different implications. And if we start talking about having access to the cap table and a kind of a true security concept, that is going to have implications in terms of the methodologies that we use to value the tokens for whatever purpose. And if it's for compensation to employees and founders and potentially other investors, there are certain types of methodologies that we have to use. And this has effects that it rolls down forward. So you may run a token sale and you'll have tokens that are for compensation, and then there's an impact on the overall value of the company, because if these tokens are worth something when you give them out to people, all of a sudden they're going to be worth something when you're valuing your overall company down the line. And so we have to be cognizant of the effects of that when you're, let's just say you're issuing regular equity down the line, and all of a sudden you have these tokens that are sitting on your balance sheet. They could influence the overall kind of operational effect of the company itself. So things that are very important now that maybe we didn't necessarily think about, I don't know, 6 months, even a year ago. It was just, let's do this token sale. Now it's, what happens when this rolls forward and we're truly getting closer to a project going live and this network kind of working out. What's going to happen to the overall effect of the compensation aspect of it? So it's certainly very interesting.
Yeah, but this dynamic has existed for a long time, whereas you're starting off, you have an idea. Even at the point that there's just an idea, there is value to that idea. And if you start granting your employees, your advisors rights to that idea in the form of a promise of a token, there's value there. And it's a pressure point. You can't say it's worth nothing, because it does exist. Even if it's not yet coded, it sort of exists in some form. And we have to be careful about when those promises are made and when that compensatory dynamic takes place.
That's exactly right.
And how, I mean, Stan, with thinking about how that translates to the market, people debate how much do you give to employees, advisors, founders. What does that feel like today in terms of, because it's a concept that's been around and people take different approaches. Can you comment on that? And I'd love to hear your perspective, Lowell, then from a securities law standpoint.
Yeah, and it's an investor-driven conversation these days. I mean, like we're past the point in the market where the company got to really kind of run the table on the market and figure out, okay, well, we're going to keep a large chunk of tokens in-house and we're not going to lock it up. And part of it will be, allocated to founders, part goes to the company. And so there are all these kind of divisions that were really fungible and unclear in transactions we saw over the last year and a half. And I think the market's become much smarter and be much more sensitive. And because the number of more sophisticated investors in the market is actually increasing, that's a big positive trend we're seeing, is that there are a number of really strong thesis-driven investors emerging in this space that look both at equity and tokens. They have a pretty strong view as to what the company should keep, what the overall token economics should be. They're very sophisticated in their own modeling. They understand what the lockups and traditional incentives are, and so the structures now are mirroring what we've seen in venture for a very long time, where there are traditional lockups and tokens delivered over time, and executives having cliff vesting, and so we think as we kind of go through a pretty difficult time in the market, investors have lots of choices in terms of quality projects. A lot of quality is rising to the top. A lot of projects are offering both equity and tokens, and so investors are in a pretty strong position to negotiate what the company gets to keep, how to use those tokens, and really what further governance instruments they get to put in place to make sure that there's no dilution to them, to the company, and that everyone around the table in the project sticks around long enough to see the roadmap to fruition.
That's good. Good. Well, comment on the legal perspective?
Let me give you the perspective of a sort of a venture capital lawyer in Silicon Valley for the last 25 years. One really important thing to distinguish between equity and a typical utility token is that we got a fixed supply. So equity goes to 100, like you hear this a lot, equity only goes to 100%. Well, actually it goes to 100% as many times as you want, because you can constantly issue more equity. And really what happens is it goes to 100% initially, and then later on there's new investors, and sort of there's natural dilution that happens. Tokens go to 100 once, and it's a fixed supply. So maybe that's a benefit to some, but over a long term, when you're talking about trying to build a company and trying to, get the incentives right from the beginning, it's a real challenge. So I don't mean to suggest that you need to overly guard your token allocations, but they need to be really thoughtful because of this fact.
It's a perfect point. I like the analogy, right? Just 100 one time. Right? I'm a bean counter, so I get that concept pretty well. So, Eric, how does this translate? Because you're in building your team, and you have a pretty sophisticated team. in thinking about from a retention standpoint, I know Stan mentioned, vesting being a big deal, and at the same time, I think tokens have become a benefit in that they have perceived liquidity at an earlier point than equity may in a traditional fundraising round. So can you talk about how you've navigated that topic with your teams?
Yeah, and I think...
and I'll remind you, your counsel is sitting right there.
I have all my service providers here talking about collaboration, right?
That's right.
They're always very servicing me, which is great. For us, we are building something for the very long term, right? So we're not doing something for the next 6 months or 1 year. And so we have a plan to release tokens to the employee over 4 years. It's not something that we deliver right away, right? So we have a plan to deliver similar to what you have with an equity plan usually, right? It's usually over many years. We do the exact same thing for tokens. And to your point, Laura, we kept some reserve of tokens out of what we call the founder pool to make sure that we can attract and retain additional talent in the future. So we have a mini reserve of tokens, which is hard to keep because everybody wants to use it, right? But we are very strict on keeping that reserve to make sure we can continue the build of the platform. Again, it's a vision that you have to translate into your token economics and not the other way around, right? I'm very sensitive to that, which is you build the business first, you build the vision, you build the platform. The rest is a consequence of what you do and not the other way around, which we've seen last year a lot, right?
I love how you're living the advice that you've been giving.
I know, right?
This is perfect.
Finally.
Hold true to that. Now, we've kind of fallen into, I think, what I would call more of I don't want to use the word utility token, but I'll call it a non-equity token. But let's pivot there just a little bit because I think we've seen some evolution in the market in terms of what people are asking for and what they want. They have different dynamics. So can you talk about, maybe Stan, just think about what are people, when we're taking the business model to market, right? And they do have the 100 one time, back to Lowell's analogy, right? This many tokens, but then there's this equity component. So has the market shifted in what people want as we're building these business models? And what are they after?
From an investor perspective?
Yeah.
I think the market's shifted significantly just in the last 2 months. And I think that's a true statement globally where the total amount of funds deployed in the space is much lower. The quality of projects we're seeing on balance are much higher. You have much more experienced teams. You have well-funded, equity-funded teams that are bringing their projects to market. And again, like I said, investors have a lot of choice in what they invest in, how they choose to deploy capital. And so what we saw over the last 2 months is the emergence of, they've always been around, but now it's more of a standard thing, which is kind of this notion of a signal round where you're offering some combination of incentives, potentially equity and tokens at a highly discounted valuation to bring in large investors, and then you have theoretically later on a second transaction where you have a broader universe of investors. But what's new is that you now have a broader set of securities, instruments, things on offer that investors can choose from. And even to us, sometimes it's unclear where investors feel like there's a free option. Is the option in the equity, or is the free option in tokens, or is there deep significant value in both sides, in the cap table and in the network value of the ecosystem? So we've seen many new instruments and creative ideas emerge around funding as the total dollars raised sort of decreases significantly, and the average raise size comes down from 20 to 30 to somewhere in the teens or less. And the average check written by large investors, by syndicates, by thesis-driven funds, comes down from millions to hundreds of thousands. So that's on the utility token side. On the security token side, I think we're just on the precipice of the market. We're seeing some of the core infrastructure being finally deployed, I think this quarter or next. And that's going to give us a real deep sense of what the liquidity is on the security token side, which I think has been the gating item to that market really flourishing. And once we see that liquidity, we'll have a better sense of who is the investor universe. There's lots of fantastic work being done, both at the exchange level, at protocol level, at the service level, at the KYC and compliance layer, and lots of real institutional players coming into the space, both custody, both trading, exchange. So that infrastructure is really being solidified now. And so I think as we talk to investors, I think it's still some time out, a couple of quarters on the security token side before real dollar stuff starts showing up. but we really kind of see interesting projects, quality structures, quality players coming to market, and really working through some of the challenges.
And I'll remind everybody, when we talk about securities, that's a broad definition, and Lowell will get into that. But even within that category, you're going to find, equity type securities, debt type securities, maybe a derivative, maybe a right to something else, which has drastic implications from a tax standpoint, right? If you issue debt, tax free, right? Generally to the receiver, other than the interest component, and from an equity standpoint as well. Very, very different from a utility type token scenario. So we talk about securities, that's a very different kind of SEC derived definition which you specialize in. But even within that framework, there's a lot of variance. But once you get into how this is evolving now and investors wanting different things and the pressures on the companies, how is this impacting?
Yeah, I think there's a couple of really interesting data points. Right now, I think we're just starting to see, you guys have probably heard the acronym ATS, which is an alternative trading system. And we're starting to see, SharesPost has one that they've gotten through the regulatory side of things, and they're still building the functionality, but that's coming in the next few months. And we're going to start to see 6 or 8 of these things coming online over the next 6 months probably. And that will provide an actual secondary trading platform for digital securities that are not registered with the SEC. In other words, restricted stock or restricted securities. What I would say is it'll have a little bit more liquidity than a typical private company stock has, just because of the nature of an ATS and the nature of an online trading platform. But it won't have anywhere near the liquidity that utility tokens have. It's not like trading something on Bittrex. It really is going to be very limited. There's going to be a lot more rules about who can trade, how they can trade, suitability requirements. You'll have to have broker-dealer accounts. It'll be akin to having a Schwab account to buy some of these security tokens. And that'll introduce more friction than in the utility side. So, that's something to keep in mind. There's several valid ways to think about this in general, and one model is certainly to do this sort of so-called two-token model, where you start by raising capital using a security token and keep things very simple, and you don't deal with this notion of mutability, where a utility token that ultimately is intended to be a non-security is sold initially as a security. That can be confusing to people. That is something that we still don't have 100% clarity from the SEC on mutability and how it works, and it's a novel concept. So that fact has led a lot of people to do this two-token model, where they just simply do some kind of an actual native financial return. Maybe it's an equity, just tokenized equity. Maybe it's just a financial return that you bake in that is essentially like a debt instrument. Either way, it's a security, a non-mutable security. That particular security will just be bought and held by the investor. It'll never really trade. It'll trade on these ATSs in sort of lower liquidity environments. It may have a little bit more value than you've seen in sort of traditional equity rounds because of that slightly higher liquidity. But beyond that, it's just a traditional equity concept that people will buy and hold for its financial return value. Whereas the utility token, could come next. Once you've used the money to build the functionality, you could then go on and do something that is intended to be a non-security, sold as a non-security, used in a network as a non-security. So the two-token model is something that we're sort of seeing. I think it's a valid way to go. I think probably more than anything, we're still trying to do the single token model, but we're starting to see the two-token model in a few cases here and there.
Wow, the way things have evolved, right? I mean, just a few years ago, everything was kind of behind the scenes, and now it's front and center with legitimized trading platforms, which changes the landscape drastically, right? Access.
And Rob, I think what's interesting with all those notions is that you have to educate your investors way more than traditionally, right? So especially for us, so we are building a supply chain platform. So we go after the blockchain investors, the supply chain investors, and traditional VC money. And of course, the blockchain investors, they know all of that because they talk to Lord and Stan and everybody here. But the other ones, they have no idea what those things are. And so you have to do a lot of education to the investment community around those topics. And because it changes all the time, It's pretty hard.
Yeah.
And that's why you need, to your point earlier, you need a team around you to actually do
Collaboration
that.
is key.
Yeah.
Now, you said building the platform.
Yeah.
So there's actually life beyond the fundraise. People don't talk about this.
No,
you're building it, right? So you want to talk about, like, you're building as you're going, right? You're building the platform to execute on a real-time basis. Can you talk about that experience? People don't talk about that as much, right? What is it like to build a team to execute on something that's just so different?
And you know, last year you could raise money just with the white paper. And so when we started the company, we decided that we are not going to do that.
Yeah.
And we said, let's build something, and then we raise money based on what we've done, and we can actually demonstrate to the market that we know how to do things, right?
That's right.
And so that's what we've been doing for almost a year. The company started before I joined. I joined 5 months ago now. And building a blockchain solution is super interesting, super exciting, and also super hard. Right? I keep saying blockchain is bigger than you think, it's harder than you think too. Today we have 45 people in the company, and we are building a supply chain platform, marketplace, and track and trace. And the majority of the team is actually engineers. We have half of the team in India, and then the rest of the team in the US. And so, to me, that's kind of traditional startup, right? When you don't think about the investment side and the token side, it's really traditional startup, which is super interesting and hard because of the market.
Yeah, love it, testing. And this is, a lot of companies are in this state, right? They had tremendous fundraisers last year, now they're building the platform, right? And others are building as they're going after the raise and really putting their money where their mouth is and going beyond the white paper. And the regulatory environment continues, right? People ask about valuations, ongoing of the tokens, but also of the equity, right? You have a company that's now building value as they're operating. So tell us about what that pressure feels like when, for the first time, investors say, okay, what do we value this thing at now? Neil?
Yeah, that's exactly right. And we kind of alluded to this earlier on. It's, you know, you've raised money via some sort of token sale, and you know, now the product is moving towards going live, and there are implications. So how do we kind of take that into the concept of the overall value of the company? So now we have to look at that. We have to look at, you know, and even if it is, you know, if it's a utility token, if it's a security token, there's some sort of value there. And so there are different models that we have to put together now to value these companies, which maybe it's not even monetized yet, but still, just like from a kind of forward-looking concept, we have to take into the idea that there is true value here over time and bring that back to the present and understand kind of, you know, while, you know, we may have raised something on a certain concept, and it may be that it's not worth that much, you know, from a whatever kind of a cost-based approach or something like that. There is kind of an extended utility of value that will be there in the future, and we have to take that into hold when we put this all together. And so we get a lot of questions about, you know, hey, these things weren't worth much, and now we were asked to kind of look at it again 6 months or, you know, maybe a year later, and the values could be significantly higher if you're closer to going live on the platform, or maybe you are live on the platform. So that's something we have to really consider. And it's evolving, right? There's thoughts from the SEC, there's thoughts from the accounting world, but you know, we have to kind of navigate that through together, because there isn't anything that's definitive just yet. And so that's why, you know, we're all up here together kind of talking about things, how things move along. And it's important to be as plugged in as possible to gain the input from everyone as we work this through.
Oh, it's and changing every day, right? Different points of view, different regulators chiming in. The regulatory environment continues on even with an operating company. And we've seen companies go forward and they struggle a little bit because the model continues to iterate as well. What the token represents, where they have the humans, right? Where they're operating, how they're operating. And every different regulator has a point of view, right? And so do you want to talk about some of the pressure points when building out the operating company? I know there's 9 different regulatory bodies maybe that we care about or more. How are we advising companies on that?
That is the really heavy lift, I think, for us as lawyers, is it's not so much the raising of the money, which is, you know, relatively tried and true, especially with the way that, you know, we sort of do things and characterize them as securities initially. But to get to that point of actually architecting a token that is a non-security, that can trade in spot markets as a commodity without regulation, that can deal with in a commercially viable way with sort of the money transmission laws, threading all of those needles with an executed commercially viable project is incredibly difficult, and it takes a lot of iteration back and forth with all of us, with dealing, frankly, with all the various priorities to try to get to something that actually is workable. So it takes months and months, and it's not just executing in a vacuum. You have to literally execute with all of your service providers. So it's incredibly expensive and time-consuming.
And as Stan, as we're seeing the markets as these companies mature, and then a lot of times they have tokens sitting in reserve for future use. They're looking at future rounds. I've heard a lot more people talking about another round of equity, right, to supplement. Can you talk about that? I mean, a ton of mature companies now that are like drugs that they've built, right? They're out in the market. They're still iterating, but they're moving forward. And then they say, okay, what's next from a cap table standpoint?
Yeah, that's exactly right. I mean, I was in San Francisco the last couple of days, and all the conversations we've had were mostly about companies that were successful last year, past clients that have built meaningful businesses, that have test nets, that have mainnets, that have real products, that have applications out. I'm now seriously thinking about doing a traditional equity B round, something that's a little bit chunkier, something that really gives them runway and also credibility in the investment world. People realize that money isn't just money. You need the expertise and insight from a network of partners to help the company grow. It also may have something to do with their significantly smaller balance sheets, given where the markets are. But I think that's kind of the next push, and this dovetails well with a number of large check partners coming to market. So we've heard recently about Yale funding a number of venture funds. We've seen Andreessen and a number of other traditional venture funds allocate cash specifically for this space, for the equity in this space, not tokens, but equity in this space, and really come in force and be thoughtful about this space. So I think equity is potentially the next big leg over the next 6 to 9 months as companies that have real traction, real communities, real businesses, tokens that have a functionality in their programmatic ecosystem, look to build real businesses.
Yeah. Well, it's interesting, right? Because we talk about doing the right thing and how hard it is to do the right thing. The real test is when you come back to a VC and ask for a traditional round of equity. The diligence involved, right? They're really testing how good you actually did, how well you document, how well the story holds together. They're going to diligence tax, regulatory environment. They're going to test drive the systems, right? They're going to look at your valuations. So not only are we trying to satisfy the regulatory environment, but don't forget, you may be asking for traditional fundraising, and that diligence is going to be tough. So it's a real test of doing the right thing, which is what we all do, and it's just been a pleasure collaborating with you guys in the market for all this time, and really a nice conversation. Thanks so much, and thank you all for having us.
Thank you.
Thank you.
Good job. Thank you.
I won't take it.
We need, where is he?
Who's the commander of the clicker?
Sorry. And there's no one on stage.
Yeah. And, you guys ready for me to go out?
Yeah. Go for it. Enjoy.
Thank you.
Well done. Pardon?
Good work. I was like, thank you.
Well done. It's good conversation. Yeah. Nice job. Thank you all.
You did great. You did great.
Good conversation. All right.
You guys want to queue up that next deck?
Mike. James, how you doing? How are you, man? See you. There you go. I did, thank you. Yeah, thank you.
Thank you.
Ooh, look at Ribble socks.
Next year, you have another one.
Well, why is it next year and not this year? What's the problem? Yes. Okay.
Good morning, everyone. My name is Miles Piscini, and I'm one of the founders of B21. And we're going to talk today about crypto asset investing. And I want to start out with how funny I thought it was that the organizer suggests that we talk about Warren Buffett and why or how he would invest in crypto, because we all know that Warren Buffett has publicly denounced crypto. And so we'll have a little bit of fun with that today. The first thing I want to talk about is what are crypto assets. A lot of people have a relatively narrow view of what they are, and so I just want to go through a quick kind of overview of what a crypto asset is today. And the point I want to make is that this is really evolving. It all started out as we found out about network tokens, Bitcoin being really the first one, and it was used as part of the consensus protocol to secure networks. Then we saw other stuff come along like Ethereum, EOS and Monero are reasonable examples, and because of Ethereum, we got introduced to utility tokens. So essentially, we had smart contracts, which were built on top of the network, and probably the biggest thing that we got out of utility tokens was the ICO, but these utility tokens were essentially as fuel to power networks, and so they allowed us to do things like develop applications, but I think the biggest application was the advent of the ICO. And then we started talking about, hey, can we tokenize assets? And so tokenization of assets could be real property, it could be art. There was a lot of ideas around how can we take a physical asset and somehow tokenize it. And then it evolved into, well, what about a security token? And I think this is kind of the necessity and evolution that came about. But we started talking about, does the security token represent an interest in something, a revenue share, potentially equity, and other types of stakes in an enterprise? And then we had non-fungible. So CryptoKitties is the most the most well-known non-fungible, but it could be collectibles, right? So think again of art, maybe a baseball card that's a unique issue, and we want to track that unique piece of issuance. And so the point I'm making when we talk about crypto asset investing is it is a market that's evolving. This is a picture of what it is today. Who knows what it's going to be in the future? I'll have something fun to share with you here, is that this is a painting I bought several years ago. And I always ask people, what do you think that painting's worth? And I'd get everything from $5 to $500. This was painted by, I'll call it Bitcoin maximalist, and I loved it because of what it meant about Bitcoin. It was a Silk Road painting by somebody who was an original Bitcoiner. But this painting could be worth $1 billion. Why? This painting has a Bitcoin wallet address attached to it and a protected private key under the foil. And so I show this example to say that 3 years ago, this was an idea of tokenization of an asset. This painting, realistically, could be worth $1 billion in the future if we just dump some Bitcoin in there and wait a little bit of time. This was an early idea, but the point, again, is what we think is crypto assets today is likely to evolve. Here's another example. I was given this by Bobby Lee about 3 or 4 years ago, and it was 5,000 Satoshis. Has a wallet address and it has a private key hidden. Who knows what that piece of plastic is going to be worth in the future because it's been digitized. So these are just examples of what the future might bring for us. So the question is, why would people invest in crypto assets? I think the biggest reason why for most of us is you could participate in potentially transformative technology, and that's exciting to invest in the future of what technology could be. Also, crypto assets can represent fractional ownership in things that typically weren't available to investors. So imagine owning part of an iconic building, which would never be accessible to the average person. That's an interesting one. Historically, crypto asset investments were made available to everybody. That was the beauty of the ICO. But in places like the United States, that's changing, and in the spirit of October, we'll say boo to that. We don't like that, but that's a reality of what's happening in the United States. Another appeal to crypto assets is a global market. It's borderless, right? So you can invest in teams and projects and technologies that are being developed all over the world, which typically early stage investors would only focus in their country or maybe even in their state. There's the potential for high return. That's exciting, like we all want that, but it comes with high risk and high volatility, and that's the reality of this marketplace today. A pro is liquidity, right? So if you're an angel investor and you invest in a startup, you're typically stuck in that deal for 3 to 10 years. with no liquidity, right? So you've made your investment, that's it. The appeal of crypto assets is I make my investment today. If it's listed on a secondary market, there's liquidity for that. So I can, whether it's up or down, I can get out of that investment. So that's an appeal. And I think just generally, it's new and it's exciting, right? We haven't seen an asset class like this come around for a very long time. So taking Mr. Buffett here, people say, well, do they perform well? You know, what's the reality? Now, I could have taken so many different snapshots of this. I decided to go back 1 year, to be fair. In the last year, if you had invested in the S&P 500 $5,000 and you had invested in Bitcoin exactly 1 year ago, your S&P would be at 2,900, Bitcoin's at approximately 6,500. So what does that mean? A $5,000 investment in Bitcoin would be worth 7,900, the S&P would be worth 5,800, and so people ask me, well, should I invest just in stocks or indexes or whatever? The point is that these assets are performing interestingly well, even if you look at Bitcoin in this case, where the majority of the year is a bear market. So why won't our good buddy Warren invest in crypto assets? Number one, it's just simply too complicated today. The industry was built by technical people, so we have wallets, exchanges, private keys, all types of hurdles, including getting money in and out of the platform, which is quite difficult. Most of the general public is not geared toward being traders, and we're asking the general public to be traders in crypto assets today, and it's really not an environment they're comfortable with. Hard to secure your assets. It's difficult. If you want to own 20 crypto tokens, imagine your 20 private keys or your Trezor or your paper wallets, whatever combo you have. It's just not made for mass adoption yet. Lack of transparency or little or no regulated service providers is a big problem. And outside of the US, there's a huge trouble in getting in and out of crypto investments using fiat funds. So what needs to change? We need better user experiences. We need to remove technical barriers. We need more regulated service providers. We need better on-ramps and off-ramps to investments. We also need education and training. It's one of the biggest issues that exists in the market. And we need new products. What we're finding right now is institutions won't enter because the products don't exist. Consumers won't enter because there's way too much friction in the investment process. So good news, things are changing. Things are happening. There's apps like Abra, Revolut, Circle that are trying to address the consumer market, as well as B21, which is the company I represent. So we're trying to appeal to the mass market through creating products. Custodians are coming. You have Coinbase, BitGo, B21. We're trying to create an environment where people don't have to worry about their own security of their assets. And new products are coming to the market. We have ETNs, ETFs, and all kinds of different funds that are coming. So we have product diversification. Recently, hot topic is stablecoins. All they're trying to do is solve the friction between moving in between investments and moving in and out of investments. So that's a positive thing. And then we see regulations coming. So at B21, what are we doing? Number one, we're providing education. We've launched recently an app called B21 Life. I would suggest you go download it in the app stores. It's free. And all we're doing is trying to provide content to people that they can consume and learn. We have news, we have educational courses, and we have daily tidbits of information just to help people understand what's going on. And important, Warren Buffett quote says, risk comes from not knowing what you're doing. So very first thing is educate people about what crypto is all about. We're launching B21 Invest. B21 Invest is an application that allows people to create and manage their own portfolios. We focus on goal-based investing, so we ask people what their lifestyle goals are. You want to save for a house, how much money, what's your time horizon, etc. We're trying to encourage people to not be day traders, but to become investors. We're dealing with things like solving on-ramps and on-ramps, and we're just making it simple for people to get involved. The idea is that within a few clicks on a mobile app, you should be able to enter the market and exit the market without too much education. And these are just some views of what we're developing. So what's the summary? We have a very exciting and evolving asset class. Those of us who've been in the industry for the last couple of years, we went from Bitcoin to 2,000 coins or so, and we've seen things change from just having a network token to having a plethora of ICOs, and to where we are today, talking about security tokens and stable coins. So plan on that to continue to evolve. There's so many different assets to choose from today, and I can assure you that the assets that we're looking at in the future will evolve as well. I believe there's still high opportunity for gains, but anybody investing has to accept that those opportunities come with risk. And right now, I'd say the risks are high, but the returns are high. You don't, if you're going to put money in a CD, you're going to get a 1% return. But if you're going to go to Vegas and put it on black, you got a much better return, but a massive risk, right? We want to be somewhere in the middle of those games. And so the other positive thing is new tools are coming. They're being developed every day by my competitors and my colleagues in the industry, and I think that's a positive thing. Just in closing, it's a very exciting place. I think that companies need to continue to develop tools to make this more accessible to a broader market, whether those tools are institutional or consumer. B21 is doing our part to develop a custodial service directed at a consumer market. If you have any questions or interest, please grab me in the hall. Thank you for listening. Yeah, green is advanced. That one actually works, which is good. Oh, thank you. Swag bag, I like it. I'll give that one for you. Good headset. Half of the ones fall off your head while you're talking.
I'm Matthew Gould.
I'm Brandon Podeski.
And this morning we're going to talk about putting domain names on the blockchain. So cryptocurrency, I would say probably the first problem a user encounters is these awful hexadecimal addresses. And much like bank account numbers, people are sending money to each other using 40 hexadecimal strings. And the future is very obvious to those of us who remember the original way you would look up websites, is that we're going to use names. And so on the right here you can see we have names like Matthew.eth, and you could use that to send cryptocurrency directly to me. This is a perfect analog to the original IP addresses in the late 80s. Most people probably don't remember, but you used to have to type in numbers to get to a website address. The thing about blockchain-based domain names is they have lots of applications beyond simply sending cryptocurrency payments. Obviously, the first and most important thing about blockchain names is that they're easy to remember, as opposed to hexadecimal addresses. And of course, they're going to be used for payments. What may be a little bit less obvious is the future for decentralized websites, ID, and messaging using blockchain-based names as endpoints. This is actually not theoretical. So that's me, or at least that's my Twitter profile. And you can see that I've connected a photo associated with my Ethereum account. And this is built on top of Ethereum using the Ethereum naming service. And I've also connected my Twitter and Telegram. This way, when you need to send money to me, you can know you're sending it to the correct person. So you simply put in my name, MatthewGould.eth, and it automatically looks up my associated cryptocurrency address, and then additional endpoints that can be specified by the user. This is extremely flexible as compared to DNS, which has some limitations that we'll discuss a little bit later. And most importantly, this is currently live. I also want to point out that photo you see is on IPFS. Some of you guys may know that as Filecoin. And this can be plugged in with any other decentralized storage solution. So what we're having here is endpoints on a blockchain that can't be censored, that can point to any type of media that you might want. So it is my personal belief that blockchain names are going to eat centralized naming systems. The DNS as it currently is written has some underlying problems in that it's censorable. Also, DNS is almost used exclusively for businesses and not individuals. And it only does two major things well, which is content and messaging. You may know content as website addresses, and you'll know messaging as like email. The difference is blockchain names can do all of this stuff and more, and most importantly, payments. A fun fact is that the original protocol for DNS and these other underlying architectures for the internet included some specs for payments that were never implemented. And this is our chance to get it right. So you may be asking, where are we now? From a technical standpoint, we can build this stuff, at least at a prototype level, as you saw earlier, and we have that on the Ethereum naming service. And this is where I'm going to put myself on a limb and make a prediction. So probably in the mid-90s, if you went to a business and you said, hey, every business is going to have a website, you would get a lot of business owners who would say to you, no, I don't need a website. And today, I'm going to tell you that 10 years from now, every person is going to need to have a blockchain-based domain name. And yes, you can tell me, no, there's no way that I'm going to need this. But this is going to be a much easier way for you to receive payments. It's going to be an easier way for you to point to your data. And it's going to be an easier way for you to share your endpoint with applications and other people in your life. So we're very tiny, and the status of putting domain names in a more decentralized structure is just really starting to build all the component pieces. And we now have some working applications. So there's 250,000 approximately current registered names on blockchains. There's about 14 million current cryptocurrency users, and depending on your projections, you could see a couple 100 million here in the next 5 years. And the highest bid was actually for payment.eth. Someone put down $594,000 to purchase this domain name. Compared to DNS right now, which people don't usually think about, but there are a lot of .com domain speculators. There's 300 million plus registered domain names. The highest valued name was cars.com in their SEC filings, and it's mostly businesses. Cool. So I'll let...
Tell you guys a little bit about us. We're a company that's helping blockchains implement naming services, and we were mentors at last month's ENS workshop, and we're very excited about where the community is going. Feel free to come up and talk to us, send us an email. Thank you for having us. Thank you, BLOCKCON.
Thank you, guys. Always the wrong door.
A graceful exit.
Oh, yeah. Gotcha. Cool.
Maria.
Boom. Thank you. Great job. Oh, can you get the thing off the back of my neck? Yeah, thanks.
Yes, Ben. Hello. Yeah, I'm swapping mics right now. You're good. We need a couple minutes anyways. I'm gonna mic him up with the pack anyways. He thought he didn't have time, but I have a few minutes. All right. Okay. Who's Ralph? Who's Ralph? Ralph? Who's Ralph? Yeah, I'm Ralph. I need to mic you up.
Yeah, I was at Drive Fest recently, and then
Do you have a preference which side? Which ear?
I don't know, right here.
Pop your glasses off for me real quick.
Yep.
I'm gonna touch your face.
Okay. You have permission to touch my face. Well, the ones that
How does that feel?
Yeah, it seems fine. Okay. So where's the mic? It's down here. Okay. Okay, I take it that goes in the back pocket or anywhere. Oh, you're hanging on the belt. Yeah, okay, that's fine. Sounds good. All right. So, we get a sound check?
No, once the mics are already tested and everything, once he sees you walk out there, he'll turn your mic up.
Okay, sounds good.
We have an engineer in front of house.
So you believe this will work?
Yes, sir.
Trusting.
It's amazing the overlap. Yeah. I mean, I've been into crypto for a long time myself. It's just, Mark? Yes. Come here.
I don't know how to explain very well why it overlaps or how.
What?
It's a really interesting question of why there is such an overlap between
the blockchain,
Oh, yeah.
and life extension.
Well, there could be just random fluctuation, or it could be the early adopters issue. And then I'd like to think it's my paper on cryonic cryptography and maximum likelihood estimation.
I have to know.
Yeah.
When did you have that out?
That went out fairly early. It was, when was that? 90s or something? Yeah. So it was an extra P paper.
I had no idea,
yeah.
My ignorance, that you were one of the fathers of crypto.
Yeah.
I had no idea. You know, who told me Natasha?
Yeah.
Because I was talking to her about, the recent.
Yeah, I did Merkle trees. So every time anyone talks about Bitcoin, they say, well, the founding concepts in Bitcoin were blah, da, blah, da, blah, Merkle trees, blah, da, blah, da, blah. Yeah. Yeah. It was kind of, yeah. Well, I'm associated with cryonics and nanotechnology and cryptography and public key crypto systems and, one or two other minor things.
So do you yourself, you have cryptocurrency?
No, I didn't bother.
You don't?
Yeah. I was too distracted by other things, so I never got around to it. Yeah, I was listening to this guy talk about what a pain in the ass the user interfaces are, and saying, yeah, that's what happened to me. Because, it'd be a good idea to get some, but, the user interfaces are such a pain that I just never did it. So I knew it was a good idea, but I just, never got around to it because I was doing other things. And I'm still doing other things. I mean, it's still a good idea, and I'm still doing other things, because it's...
Still time to get involved.
Yeah, I know there's time to get involved, but that would require that I get involved.
Yeah.
And if I got involved, then I wouldn't do other things, which, so, Well, they must have changed the sequence.
How do you solve aging, which was done by Dr. From Sense at Block to the Future in San Francisco. So this is an extension of that same panel. And this time we have members from Alcor come on, Forever Labs come on and discuss what is it that's so fundamental about aging and life in general, and how does that connect back to cryptography and blockchain in general. So we have Ralph Merkle. I don't know if you guys know much about him. He is the co-inventor of public keys. He's also the inventor of Merkle trees that is heavily used in the blockchain space. So in another couple of minutes, we are going to come up and discuss what are the various ways today as mankind we are trying to solve aging, and what are the problems, what are the challenges that are out there, and why do we even need to solve it? I mean, why not just be born, do great things, and go back to Earth? Maybe that is what we, resolve for, I guess. How many of you, by the way, would like to live forever? Hands up. 1, 2, and the cameraman there, 3, 4. Okay, so the rest of you don't care. All right. Well, how many of you have a living will, by the way? Okay, a lot more people have living will. Nice. Well, so why wouldn't you want to live forever? If you have a living will, you're getting your properties and your assets to move forward. Wouldn't you also want to live forever? No? Okay, Robin is saying no. Robin, I'll ask you why. Why not?
about living for 200 years?
Yeah, of course.
Yeah.
It's still a spell. It's still people have broken spell.
Got it. By the way, Robin runs digital money at the CES, which is going to happen in the second week of January. So if you guys want free passes, they can come bug her. All right, let me invite the panel members on stage. Ralph, Mark, Maria. Anywhere, whichever seat is comfortable.
Yeah, you can grab
Should we
these.
crowd? Should I come over?
Oh, you can join us here and be sociable.
I know this is too far away. We should probably move closer. We'll solve that.
We have a choice. It's very quantized. Testing. 1, 2, 3, 4.
Are you on?
You're on.
I seem to be on.
I think I'm on.
You're not on?
Not on.
Oh my heavens. Ah,
Check, check, check.
they swore it would
This
work.
works.
Honest, they said it would work.
Well, what we will do is why don't we give like a couple of minutes and you guys can introduce yourself. I know, Mark, you were there at Block to the Future in San Francisco. So why don't we start with you? Why don't you tell us what Forever Labs is and your role, and then we'll...
Sure. So I'm president and chief science officer of Forever Labs, and we're a life extension company. And very specifically what we do is we bank your stem cells now in the most youthful state, and then we leverage that to practice health maintenance throughout your life. Yeah.
Thank you, Mark.
I'm a senior fellow at IMM, and I'm also on the board of directors of Alcor, which is a cryonics organization. How many people have heard of cryonics? Has everyone heard of it? Okay, most people have heard of it. Okay, that's good.
Interesting.
Yeah.
I am a Global Outreach Coordinator for Sense Research Foundation, and we are developing new biotechnologies to address the diseases of aging, or the disease of aging, if you want to say that. I know some people don't like to hear that. I'm also an Alcor member, so if we don't, get to solve the aging problem in my lifetime, I have Plan B.
Good stuff. How many people are Alcor members? Any Alcor members in the audience? Anyone signed up for cryonics? How many people are thinking about cryonics? Anyone thinking about cryonics? A couple people thinking about cryonics. Okay. How many people want to be alive, maybe not immortal? How many people would like to be alive and healthy and feeling good 200 years from now? 200, a more modest goal. 200 years. Okay. So a fair number of people alive and healthy 200 years from now. Okay, that's a thinkable goal. Okay, good. Yeah.
Ralph, since you asked that, what is the cost of going through the Alcor program?
Okay, well, their annual dues, about $700 a year. I forget exactly what the price tag is. And then there's a life insurance policy. If you go whole body, it's $200,000. And for us people who think that the brain is the essential thing and the rest can be built up, it's $80,000 for the neuro option. So you get your choice. You got to figure out which one you want to do, and it's less expensive for neuro. And I'm signed up neuro, but you might be conservative and go for the whole body option. It's a bit more expensive, but if you pay for it with life insurance, it's not too bad. Oh, and if you want an introduction to cryonics, there's a great one that was written only a few years ago. It's called Why Cryonics Makes Sense, and it's by a guy who writes a blog called Wait But Why. If you just Google it, Why Cryonics Makes Sense, and it'll pop up, and it's a wonderful introduction to the whole subject.
Got it. One of the questions people fundamentally have every time, I mean, at least I've had that conversation about Alcor, is this is not going to work. This is somewhat of not really a scam, but this is so hypothetical, so far-fetched that, what do you have to say? Like, what are the...
It's so far-fetched, it's like talking about going to the moon in the 1940s. My heavens. What a shocking concept. It's so far in the future. I mean, geez. Well, actually, when you look at it, I went into this many years ago. When I was in Silicon Valley, I'd gotten married. We'd bought a house. We had our careers taken care of. I'd finished my PhD. So there I was doing my usual long-term planning, and I figured, well, what's the next thing that happens? Life goes along, you know, career happens, things occur, and then I drop dead. That might not be exactly what would be optimal. Maybe there are some alternatives. So I began to look into the various options for life extension. You know, is there some way modern technology could perhaps deal with this particular issue? And after reviewing a number of possibilities, I concluded that cryonics had a pretty high probability of working. And in fact, given the fact that what would be applied would not be the technology of today, but the technology of, you know, pick your time frame, 40 years from now, 100 years from now, 200 years from now, whatever. My conclusion was the probability of success was pretty high. And the reason for this is the cryopreservation process need only preserve the information, which also gets back to another thing, which is why are there so many people involved in cryptocurrencies who are interested in this cryonic stuff? And I think part of the reason is that if you're interested in cryptocurrencies, you have a background in computer science and technology, and you're aware of the fact that the fundamental issue is preserving information. And cryopreservation does a very nice job of preserving information. Now, it doesn't preserve function, and if you talk with people who have a background in biochemistry and biology, they'll say, wait a minute, if you cryopreserve someone, they are not in a functional state, which is correct. If you just warm somebody up after cryopreserving them, they're not in a good functional state. But the information content looks like it is preserved, and as a consequence, once we have adequate medical technology, then we should be able to repair the system and restore it to a functional state. And in case you're interested, I wrote a paper on it called Cryonics, Cryptography, and Maximum Likelihood Estimation way back in the 90s somewhere. And I think, I'd like to think that's one of the reasons that various folks, including Hal Finney, for example, signed up to be cryopreserved. So that's a bit of a soliloquy. Maybe I should let some other folks say a few things.
Definitely. Maria, I know from Sense the route that they are taking towards this, like the end goal is the same, right? So how is Sense trying to solve this? And I know that the way we look at it is, at least from a Sense standpoint, is that, hey, it's a disease and it's like malaria and that we need to solve it. So how is Sense progressing this forward?
Well, the way we see aging is that aging is the cause of all the diseases that we get as we age. So basically, if you have to define aging, it is losing your health, because that's what the main thing is about aging that happens to us. So yes, we see it as, you know, medicine is trying to work on the disease of aging, but the approach that we have is really not working. So we have solved a lot of the infectious diseases, but we have not solved one of the degenerative diseases that we get as we age, even though we're working on Alzheimer's and cardiovascular disease and cancer, the cancer that we get as we age, which eventually, if we live long enough, we're going to get one of those diseases or several of them, and we're going to die. So obviously, aging equals disease. This is no news. I know people say, oh, but aging is not a disease. But in fact, that's what really happens to us. We get really sick. So we are approaching it as a medical problem. And this is something that, for some reason, Aubrey de Grey, who is the founder of Sense Research Foundation, he realized one day that the medicine and science, they were not thinking about it that way. They were just thinking, oh, this is normal, it's natural, it has to happen. But how crazy is that, right? 100,000 people die a day of aging. We spend $40,000 a second only in the US to treat people who are sick of diseases that come with aging. And we don't do anything but ameliorating symptoms, delaying some of these diseases a little bit. And in fact, we're keeping people alive longer, but in really, really bad state. So we realized that something had to be done about this. And so Aubrey basically explained aging and broke it down into 7 processes that happen at a molecular and cellular level. And the approach is an engineering approach. So the idea is to fix the damage. Gerontology and geriatrics look at the metabolism, and they try to understand metabolism and stop it from aging us or from causing the diseases of aging. But we realize that between the disease and the metabolism, there's the damage that causes the pathologies. So Aubrey's idea is to intervene in the damage and repair it so that we can prevent the pathologies and get aging under medical control.
How far is Dr. Aubrey de Grey from actually solving it? Do you see it's a 5-year, 10-year?
Well,
what's like the guesstimate here?
We think that we're going to see big, big changes in the next 15 to 20 years. And then, you know, the therapies that we will hopefully have by then will extend our lives enough so that we can catch the next wave. And as we know, this is moving in an accelerated way. So 20 years are going to mean a lot of progress, right? Maybe worth of 300 years before, something like that. And the world is accelerating. So we can get into the what he calls the longevity escape velocity theory, that if we can live 30 or 40 years longer, we may be able to live 500 years, or why not 1,000?
I know it takes a lot of research to get there, and Vitalik had donated to the Sense Foundation, I believe, in March of this year.
Yeah. 2.4.
What kind of amount of R&D are you trying to raise from a capital standpoint that will help us get there in the next 15, 20 years? What is like the amount of donations or contributions Sense is looking at on an annual basis to help fund this research?
At this point, where we are at with our research, I think we should be comfortable with 40 or 50 million a year. It's not so much, really. Yeah.
Got it?
Yeah, it's not.
Got it. Mark, I'm going to talk to you about this. So Alcor is after the fact, right, if I may say it so, and Sense is before the fact. How does Forever Labs solve this challenge of resolving death?
Yeah, so I would say that everybody here is here for a similar reason. It's because they've kind of made this, if this, then that, and they're projecting out. So we have digital scarcity now. So we have digital scarcity, and we can transfer assets trustlessly. What does that mean? And everybody in this room has kind of made that leap, and they've said, well, oh my, we have this now. Well, then that and that and that is all going to change. And something is happening similar in biology. We're starting to understand our biology, how it works, and how actually, specifically how it breaks down due to age. And if you start to look at that, and you start to look at the progress that's made, you can start making that same kind of leap, if this, then that. And so what we're doing right now is actually we're banking youthful biology, because there's an aspect of your aging that seems to be nigh irreversible, and we want to prevent that. We want to pool, because we can expand these cells outside your body and put them to work. So we can draw on this like youthful pool, and that's going to kind of lower the bar on the application of some of these technologies. I live in Ann Arbor, Michigan, and I can drive about an hour down the road, and I can go to the Henry Ford Museum, and I can get in a Model T and take a ride. And that Model T wasn't built to last 110 years. But it, you know, and it doesn't blow our minds to see that Model T, you know, because we understand you can do preventative maintenance and then keep that car going. And the same kind of thing is happening in biology. We're making that kind of the knowledge and basically our ability to interact with the biology is accelerated to the point that we're being able to practice preventative maintenance on that kind of level. And that's going to lead to, you know, I was talking to Ralph and Maria just before we got on the stage. Kurt, you had asked the question about, you know, who wants to live forever? And I always pose it this way. I say, well, if on your birthday, if somebody said to you, hey, how about this? You can choose. Do you want to age this next year, or do you just want to just not age for this next year? Everybody would just say, well, I'll just put it off a year, you know, and you put it off, and you put it off, and you put it off. And that's how this is going to come. And that's how it's already coming. And also, you know, it's going to be about 1,000 years before we have somebody that's 1,000 years old. So this isn't something like, you know, like it's going to disrupt all of our, you know, culture and economics overnight.
You mean I can't be immortal right away, immediately?
Well, you might already be, but we just don't know yet. We just don't know yet.
Huh.
What's the cost for this, Mark? I mean, from Forever Labs, I know there's a service that it's being provided. So what's the cost to a regular user?
Right. So if you want to get your stem cells banked, what you do is we'll send you to an orthopedic surgeon or similar, and they'll take some of your bone marrow out. That costs $2,500 and $250 a year to store it. One other thing we're offering right now is there's a lot of people getting liposuctions across the country for many different reasons, hundreds of thousands of them, and they're throwing adipose tissue that has a lot of stem cells in the garbage, and so we're giving the option to bank that too.
Got it.
Go back a little bit to what Mark was saying, that everybody is shocked when you say we're trying to stop aging. This is going, like you said, it's going to come slowly. It's not going to happen overnight. Everybody will have the option, just like you have the option today if you have cancer to go and get treated or not, which is a type of life extension, right? Because we could just say, oh, I'm going to die and I have to die and it's natural. It's the natural thing to happen because, you know, cancer is, or an infection disease you get, or everybody goes to the doctor and try to get medicine to live a little longer, whatever that is. And the limitation that we have now of 100 years, for example, if we didn't have that and we had 200 years, it would be, no one would be saying, oh, you know, 200 years is a lot of time. So this is going to happen slowly as anything else in medicine happened. Like before we couldn't have certain treatments, it would have been science fiction to have a heart transplant, etc. So this is going to be the same thing, yeah.
Right. Alcor has a program that users can subscribe to. You know, Forever Labs has something that users can subscribe to. Is there some program from Sense that users can subscribe to or buy into?
Users, what is the term you're saying?
I'm sorry?
The users what?
The users can opt into a program. Like with Alcor, it could be like full body preservation, or it could be, and Mark has for your recovery of your cells. Is there something with Sense that the users can sign on now, or do they have to wait till they...
No, we are a research organization, and we are creating technologies that will probably be, you know, will end up in some kind of therapy. We don't know what that's going to look like. It can be an injection, it can be a pill. We don't know. It's going to take some time. So
I'd say they could regularly donate to Sense, though.
So that's basically what we need is donations so that we can go forward with our research, which is going amazingly well. But yeah.
Got it. I know we are a little bit out of time, but this question is for Ralph. There's an interesting article that you wrote about death and informational death, where the definition of death is if you're just your heartbeat or your brain cells are not having activity, you can still be brought back to life, but if you destroy... Could you explain that and how cryptography is actually involved in that part?
So it's interesting that as time has gone by, our definition of death has changed. So 1,000 years ago, if you stopped breathing, you were dead, right? He's not breathing, he must be dead. And then as time went by, people got more sophisticated. In the 1800s, they began to say, wait a minute, you got to wait for the heart to stop. Somewhere in the 1800s, 1900s, people started to say, if the heart stops, then you're dead. If the heart stops, you're dead. And then as time went on, we began to realize, wait a minute, if the heart stops, you're not dead. You can actually call a crash cart and you can restart the heart. So people began to say, wait a minute, you have to redefine death again, because it's not a question of the heart stopping. It's a question of the heart stopping and you can't restart it. So now we have the paddles and the scene you've all seen in the movies, because every movie and every television show loves having the paddles. And suddenly you can restart the heart. And again, the definition of death changes. So it's becoming very, very obvious that the definition of death depends on your technology. And as the technology advances, the definition of death changes. So the question becomes, is there a definition of death which is independent of the technology? And the answer is yes. And the result is information theoretic death. And that's death that occurs when no technology can, in principle, restore you to good health. And that point occurs when your brain is so damaged and the memories in your brain are so obliterated that no technology in principle can restore you to good health. And that's the information theoretic definition of death. And that's something that people who deal with computers and cryptocurrencies and bits kind of understand in an intuitive sense. And it's also something, you know, I have a background in cryptography and cryptanalysis, so it's something I sort of understood without realizing that it was something I understood. And so it was something that I brought to analyzing the concept of cryonics, and other people did not bring that concept. So when you talk with someone who is trained in, for example, the medical sciences, they don't think about it in that way, and they say, well, a human being is a complex molecular machine, and when that complex molecular machine isn't functioning, you're dead. But that's not really the fundamental issue. The fundamental issue is when the information that's encoded in your brain cannot be recovered. Even if the molecular machinery is busted, the molecular machinery can be repaired if you have a technology such as molecular nanotechnology. Oh yeah, I study that. Interesting. So I'm aware of that too. So I bring to bear both the cryptanalytic understanding and the molecular nanotechnology. So to me, it's intuitively obvious that the information, as long as it's there, can be recovered, and that brings you to the information theoretic concept of death, which is actually making it into the mainstream. So many of the sort of critical care research articles are beginning to recognize that there is something more than just, gee, are you, applying the right sort of biological treatment? There's something more fundamental as they find more and more that this concept of death is eluding them. As they find that more and more, they can keep reviving people despite more and more damage. So I think that's the basic concept.
Well, finally, Maria, how can people reach out to SENS if they want to donate to the foundation?
Well, our website is www.sens.org, S-E-N-S. I'm going to be around here. I also have key tags with QR codes if you want to donate for all kinds of crypto money. And find me, I guess, our website would be the easiest thing I can say here on stage.
Got it. Yeah. And Ralph, how can people reach out to Alcor for the biopreservation side of things?
Alcor.org. It's on the internet.
Mark, how can they reach out to you?
Yeah, foreverlabs.com. Shoot me an email, mark@foreverlabs.
Got it. Thank you, folks. I really appreciate it.
Thank you. Thanks for having us. Thank you.
Okay. I always test.
It just came off from someone else, that's why.
I hate to laugh. I'm paranoid. So I got a question. Do you want to pull mine off or do you want to leave it on? Yeah, I'm coming back on at 1:10 or something.
After lunch, we'll put it back on.
Okay, that's fine.
Under of a company called Guardian Circle and the Guard token. And I'm here to talk to you today about tokenomics or token economics. So what is it? What is tokenomics? Well, basically, it's how you create or how you define your token and app ecosystem. So you have delivered tokens into the world. So now, in a very real sense, you are the Fed in miniature. So it's up to you to set monetary policy. You decide how much of your token is in circulation and how much you keep in reserve. You're Janet Yellen, just in miniature. You also might not realize it, but you use a utility token every single day. The United States dollar is essentially a utility token required to purchase Saudi oil. Like all good utility tokens, the US dollar is tied to something with real tangible value. So in this case, the United States dollar equals petrochemical energy. The other characteristics of a tokenomic system, the customers are in some sense now also owners. So it's like some portion of your company's value now resides in the tokens that are circulating out in the world. One great thing about this is that early participants in your ecosystem can get giant multiples of returns on owning that token. So, for example, the people who drove for Uber in San Francisco in the early days, they're not employees. They couldn't get stock. There was no structure to reward them. And yet they performed a lot of the labor. They did a lot of the heavy lifting that made Uber possible. So in a tokenized ecosystem, those Uber drivers who are mere participants in the ecosystem and not employees can also reap giant rewards. And if you think this is just some crypto nonsense, Airbnb just asked for exactly this. They realize that without their hosts, they are nothing. Uber, without its drivers, is nothing. So Airbnb wants the SEC to find a way to allow them to give stock to their hosts. This will probably never happen. Tokens, utility tokens, do this today. So in the old world, before tokenized economies, everything was about revenue. How can I get more money flowing into my company? In the new world, at least in part, some part of what you're trying to do is just make your token go up in value. Token appreciation is the goal. Because of this, your core assumptions and what you're driving towards is totally different. So it's almost like the laws of physics are different. Your thinking has to completely change in some very fundamental ways. So how do we design for token appreciation? Like anything, we steal from what's working, right? So how do we know what's working? Well, one measure is transaction activity. It's not the only measure. It's sort of like hits back in the early web of 1996. It's kind of a crappy metric, but it's also, you know, if something's getting a lot of hits, it's obviously popular, so it's not nothing. It's not perfect, but it's the best we got right now, so we're going to go with it. So this is a site called blocktivity.info. It shows all of the blockchains listed by transaction activity, not by market cap. So as you can see at the top there is EOS. A blockchain that didn't exist 3 months ago is now by far the largest, handles the most transactions out of all the blockchains right now. Here is the same information presented as a pie chart. So this area on the right here in blue, this is EOS. That little kind of blackish area is BitShares. The green is Steam. Together, they comprise about 80% of this pie chart. Interesting fact about this, one guy designed those three coins. So Dan Larimer, the designer of those three coins, is responsible for 80% of blockchain activity in the world right now. So he knows a little bit of something about how to generate activity on blockchain. So we're going to look at two of his coins. First one is Steam. Steam, what is the app and ecosystem of Steam? Well, the app is called Steemit, and basically it's a crypto version of Reddit. So people are posting articles, and then other people are voting those articles up and down. And you earn the coin Steam for your posts every time you post an article, and every time you vote, you earn a little bit of Steam. You can then use the Steam to purchase sponsored listings. So if you post an article and you want it to appear higher, you can buy that with Steam. But here's the really interesting part, something called Steam Power. If you take some of your Steam and you lock it up inside of your Steemit account, and it's sort of like a CD, and you agree not to spend it, and you know it's frozen there, that's called staking. And if you lock up your Steam into Steam Power in its staked states, you get superpowers in the Steemit system. Your articles tend to rise to the top of all the lists. Your votes count for more. And the more Steam you have locked up in Steam Power, the more superpowers you have. The other interesting thing about the staked state is that there is a 12-week wait to withdraw it. So you can't just pull it out and sell it. It takes time to get it back out of the system. So it's not only staking, but you know, the speed bump to getting it out that seems to be important. So how successful has this been? Well, Steam has about 2,000 people posting articles. There are about 10,000 people voting the articles up and down. There are about 200,000 people just reading things. And all in all, the coin Steam has a $450 million market cap. Not bad. And it's the #3 most active coin on Earth. Next is EOS, another Dan Larimer coin, probably the big one. Everyone here's heard of it. What is it? This is obviously debatable, but my interpretation is it's basically a crypto version of Amazon Web Services. You stake EOS, and the system then gives you back CPU, bandwidth, and RAM. And I'm lying slightly on the RAM, I know. But bottom line is you stake EOS, and you get the same sort of system resources that Amazon Web Services would provide you. You also get the right to vote for block producers. And again, there's a way to unstake your EOS. It takes 3 days in the EOS system. So how successful has this been? Well, the market cap of EOS is $4.5 billion, and it's the number 5 coin on Earth by market cap. So again, not bad. And if you think that EOS is just about speculation, 54% of the EOS that's out there circulating in the world is in the staked state. So however he did it, Dan Larimer found a way to motivate people to stake EOS to participate in his ecosystem. Conclusion, staking is good. And this is just common sense. Staking reduces supply, which increases demand, which drives token appreciation. So now, armed with this knowledge, what did we do? How is Guard used? Well, in our universe, we're a utility token, like the dollar. We tie it to something with tangible value. In our universe, Guard equals safety. More Guard equals more safety. So what do? Real quickly, we're global 911. Wherever you are on the planet, whenever you're in trouble, all you do is press a button. That sends your alert up to the cloud. The cloud looks down and sees what people and resources are already near you, and then pushes all that help to you as quickly as possible. We're in the flash mob of help business. That's what we're doing. How do we motivate this? How do we make this happen? One, end users stake for their own alerts. So every end user stakes a pot of Guardium for their alert. When responders come, they split that reward. So this creates sort of like a treasure hunt environment for emergencies, somewhat similar to what Bird did for electric scooter charging. There's a minimum of 100 Guard to stake alerts. The maximum, there's no limit. So the more Guard you staked, the better protected you'll be. The more help you'll attract, the higher priority you get in the system. Number 2, if you stake at least 10 Guard, you have the right to operate transcripts. And transcripts in this case are stored on the blockchain, so they are immutable. The cops can't go and monkey with it, and you can't either. So everybody knows that this is a true record of what happened during your emergency, and you have the access control. You decide who sees it and who doesn't. If you stake 10 Guard, we also allow you to operate an emergency information lockbox. This is basically a record of all the stuff you don't want anyone to know about unless you're in trouble. So your secret health issue, where the key to your front door is hidden, that sort of thing. 4, we have a lot of folks that come to us now and say, I operate a geography, whether that be a city, a school, a corporation, a resort like Disneyland, something like that. We want to receive all the alerts that happen on our property. So if you stake, as an organization, if you stake Guardium, you can now get the right to receive all alerts that happen within your geofence. And this is an example of what that looks like. Of course, we have the, the territory set to the world, so your territory will ostensibly be a little bit smaller. And 5, this is a really big one for us. Any device manufacturer can plug any alert device into our emergency grid. So access for our API is done by staking Guardium. Your API keys are tied to a Guardium wallet with your stake in it. And for each Guard that's in there, you get the right to add 1 device. So 1 Guard equals 1 device. This is very different from the per seat, per month fee model that a lot of APIs use today, before tokens. So instead, you stake Guard and you might be able to sell it later at a profit. And these are some examples of some devices which are actually plugged into Guardian Circle right now. This is from the Women's Safety X Prize contest in India. We had about 100 people plug their devices into Guardian Circle. And we staked some Guardium ourselves to plug Alexa into our emergency grid. So you can just yell with your voice to your Alexa device, and that will set off the alert. So we've just shown 5 ways in which Guardium is staked. Our ecosystem is 100% geared to motivate staking, which is, as we've just learned, drives token appreciation. Thank you. My name is Mark Jeffrey. Thank you for listening. Nope. This way. How do I leave? I was like, where is...
there don't have credit score or unified system how they can score clients. And what do we do, right? This is not only one solution. We also could use blockchain in order to solve this problem. And our solution allows people from all over the world to connect to each other. Let's say we have investors from the United States that can lend money to people in India. So investors from the United States can get higher return on their investments, and people in India can get loan with reasonable interest rate. And our solution looks like this. We have a coin for cross-border transactions. Also, we have artificial intelligence audit and a web and mobile wallets. The big part of our solution is based on partners and partnerships. Let's say KYC function of our solution will be done by partners, also reputational companies and platform, and insurance to protect the lenders. And our blockchain built on masternodes and proof of stake that helps us to be more efficient with the mining process. And our achievements in the last 3 months, we've got on 2 exchanges, the market cap is $55 million, and the price per coin is $1.05, let's say, 50 cents, sorry. And also we recently got published on CoinMarketCap. And we've got as a key partner Civic to do KYC for our customers. And we're continuing to grow our partnership network. And if you have any contacts that might be helpful for this project, please talk to me after the presentation. I'll be happy to share and to have your input. And what's next? We'll get more partnerships, more exchanges soon, and yeah, that's basically it. Please talk to me and feel free to ping me on social media and join our community to follow up on the project. And yeah, let's do the blockchain for social good together. That's it. Yeah. I have to take it off, probably. I'll be back.
Going right after lunch. Thank you, Kurt, very much. The scheduling. Nothing like garlic naan to instigate social interaction and conversation. That was a good call, too. In the 1999 film, The Matrix, Noah wakes up from an illusion in a physical world and realizes he's a part of someone's machine. For decades, corporations have been keeping consumers in the dark, utilizing their data and identity for commercial profit. In a recent conversation I had with a data aggregator, when I shared our vision for Big Token and our desire to create transparency, expose data to consumers, and give them choice, they came back and told me that they would not support that use case. They said no. We are all a part of someone's machine, and it's time to change that. Right now, you can take a small step. You can take out your phone, go to your settings, look at your location services, and change them to only share your location with applications that it's absolutely necessary to have. When you give away your location, you give away a piece of yourself. You give away your data. And in most cases, you get very little in return. Trax is a data marketing and media company. We've been operating for 10 years. We understand intimately the commercial challenges when it comes to consumer data, but most importantly, the challenges we all face as consumers. We created BigToken to change that. BigToken is a platform for consumers to own, manage, and earn value from their data. Every industrial revolution has required a core resource. Unlike industrial revolutions of past, the fourth industrial revolution requires data. And that comes from each of us. Who we are and what we do day to day creates data. And that's what's going to fuel our next economic explosion. All of you have heard, if you don't pay for the product, you are the product. Turns out, when you pay for the product, you're still the product. All of these organizations, and many others like them, commercialize your data. Very often without your understanding, without your clear, informed consent, right? But we're so used to saying yes. And us saying yes over and over and over again, and the advancement in technology that allows corporations to capture that data has created an explosion of data. More data has been created in the last 2 years than the entirety of human history. That will double in the next 2 years. But we're starting to wake up, right? Neo, in his journey through the Matrix, recognizes that he's a part of a machine. And him, that gives him power, right? We're starting to wake up as well. We look at the emerging rights that occurred in the previous industrial revolutions. Every industrial revolution has emerged new rights. And what will happen in the fourth industrial revolution is that rights for our identity and rights for our data will emerge and become prevalent. And we're creating the applications and tools for us to manage that on an individual basis. At BigToken, we look at intrinsic data value. We're all valuable in many, many ways. One of those ways is the value of the data that we create on a day-to-day basis that right now is being commercialized by other people, right? And we're creating the platform and the tools to change that. As these new rights emerge, what will become prevalent will be transparency, informed consent. When we click yes to terms and conditions day in and day out, we should really know what we're consenting to in simple and clear ways. We believe in choice, transparency, and ultimately compensation. Your data is valuable. Right now, you earn nothing for it. We want to change that with our platform. And that's when we wake up, right? That's when we have that Neo moment. We realize we're in a machine. We realize we have power. And that power gives us the opportunity to rule. So please join us in our mission. Go to bigtoken.com/beta. Sign up for our new product. It was released 2 weeks ago in the App Store. We have a booth in back. We'd love to talk with you. Join us. Let's take our data back. Let's beat the machines. Thank you guys very much. What do I do? Hey, David. How you doing?
You up next?
I just finished.
Oh, you just finished. Oh, I heard you. You were great. You did great.
Thank you very much. Appreciate that.
I was thinking, who's up there doing? You were doing a great job.
Oh, thank you. We talked forever ago when you were at EOS, some point last year.
Yes, yeah.
And you've moved on.
It seems like forever ago, doesn't it?
It feels like a decade ago.
It was a long freaking year.
It was a long year.
Yeah, we started Strong Block after I finished up at BLOCKCON in May, and then led the launch of the mainnet for EOS.
Okay.
And then that was all of June.
Right.
And then in July we started Strong Block, and a bunch of people from BLOCKCON that I brought in anyway came with me. So I've got myself and 7 other people that were all working on EOS are now on Strong Block.
And what's Strong Block?
I can't tell you.
Okay, really?
There's protocols and stuff. That's why I'm fascinated. Ralph is one of my idols.
Okay.
So I'm pleased pleased that he's going on in front of me, but I'm not, because it's kind of like...
When are you speaking?
Right after Ralph.
Okay.
So I guess I better get a little something in. This violates my principles. I was a rock man for years, and it's like you never eat before you go on.
Never eat before you go on, because you don't want that drop. I didn't eat lunch either.
Well, I had to wait in line. I just got out of the line.
It's a big, long line.
It's good food. Very tasty. So what are you working on?
I'm done. I'm at Trax. It's a data technology and marketing media company. And our blockchain product is BigToken, which is a platform for consumers to own, manage, and sell their data.
Yes,
so we've been using...
I remember now.
Yeah.
It's wonderful. I love that.
Thank you. Oh no. Hello. We haven't met. Appreciate your work. You were Chris Nelson. How do you want to do this? Thank you very much. Appreciate your help.
No problem, dude.
Global cryptocurrency, no matter you use Bitcoin, using ETH, using other cryptos. One single currency you can use for the whole network. Of course, you can use fiat payments, no problem. The ownership, this part, you don't need to worry about the Airbnb will delist your properties. You have a full control of what you want to do in the community. It has superior booking experience. We especially implement a function called one click to the host or one click to the guest. So before you make a booking, you can actually talk to the host or talk to the guest by voice call, video call, and so on. It has lowest service fees, 3%, 1.5 from the host, 1.5 from the guest. And also, 50% of this service fee will be redistributed to the community. That means that at the very beginning of this community, the early contributors of host, guest, they can enjoy the growth of this community. Last but not the least is that it has a smooth checking experience because we will equip every host the smart lock, smart keyboards for the smooth checking. This is our product architecture. We have combined both hardware and software together to make sure the whole booking experience is significantly improved. This also has some related experience to myself. I have 3 years of smart lock experience. For my previous startup, we built a smart lock for home sharing business. This is how it goes. You go to our website, you choose the city you want to visit. You can issue a phone call or video call before you make a booking. And you make a payment with crypto or fiat, it's up to you. Last, during your check-in experience, you have a smooth check-in, smart check-in experience, so your trip starts. For our token economics, as I mentioned just now, we charge 3%. 5% is used to maintain our staff cost. And another 1.5% were redistributed to the whole community if they're holding our token. And also, there are some other functions. If you want to issue a call with your host or guest, you need to use the token to activate this function. The background about myself, before this project, I was a co-founder of a smart lock companies for home sharing, for Airbnb actually. We built that company just because I was very frustrated when I was Airbnb host in Singapore. I run Airbnb host for 5 years. I host more than like 300 guests, 400 guests. I have issues in hosting the check-in and check-out experience. That's why I think, okay, what if we build a smart lock for the smart check-in? It's like in a concierge of a hotel. So guests can check in anytime if they want. And you don't need to wake up at 2 a.m. to host the check-in. I have some data analytics background, and my education is computational genetics. We have a top team behind across marketing, branding, design, and also engineering from very diverse background. And luckily, we also convinced the early investor of Airbnb, Jeffrey, wanted to be part of our team to guide us. The reason he joined us is because he felt that Airbnb or existing booking platform, they are not really doing the home sharing. They are more like OTA in some sense. Using blockchain technology, we have the opportunity to redistribute the value created in the platform. That means that we want to build a genuine home sharing economy. We also have other very senior advisors from Japan, from China, from US. This is the background about our Tokyo Blockchain Accelerator program. I mean, we have some interview from FocusWire, E27, and Travel Daily News. They also want to know how do we disrupt the existing industry. This is a partnership for business and for the blockchain industry. We're here. We already have closed our seed round funding, led by Bitmain, one of the largest Bitcoin miner manufacturer. And also, we are looking for another round of investment for another 24 months of runway to achieve 100,000 listings with a total of 500,000 transactions. So I'm here to network with you guys. We are looking for partnership, investment, and also we are looking for any critical comments and so on. Thank you. Okay. Oh, yeah. Okay, thank you. Sure. Sure. Oh, thank you. Oh, shit.
Were you nervous?
It's okay, yeah.
Sorry.
Thank you very much.
See you
So
later.
we have Telegram,
你什么
right?
时候走？
我还要待3天。
哦，我星期天飞。
OK， 好的，我们可以。
Yeah.
OK.
But
Yeah.
see me later.
OK, sure.
So you have someone come and walk out? No.
Thank you.
I don't do that. I do that.
Okay.
No, I do all the media coverage, not business.
blockchain, which, all right, it's a little bit overblown as a way of a title, but the basic idea is that currently we've got governance systems around the world. You might have noticed that they are, how do I phrase it, not perfect. And it would be a good thing if we could improve them in some fashion. And various folks have been thinking about the idea of applying blockchain technology to improving governance around the world, which seems like a good idea. Before I get into the details of all of that, I thought I'd ask a basic question. How many people have heard of a compression function? Hands. You've heard of a compression function. Oh, fewer than I thought. Okay, how many people have heard of hash functions? Ah, you've heard of hash functions. Okay, well, a compression function is used to make hash functions. So it's part of the inner technology, and it's also used to build Merkle trees. So it's part of the sort of the inner technology there. So what you can do with the blockchain is you can build what are called decentralized autonomous organizations. And these are structures or entities that function more reliably, and they have various properties that are very nice. One of them is they tend to be more corruption resistant. One thing I should mention is, yeah, they're more corruption resistant. They are, in the current instantiation, vulnerable to attack by quantum computers unless you use quantum resistant cryptographic stuff. So I would encourage people to start using quantum resistant cryptographic systems. But by and large, they are a vast improvement in terms of their ability to resist corruption and their ability to resist unwanted modification than existing systems. They are rule-based. So they follow a set of rules, and they follow those rules pretty reliably. And they are transparent in that you can tell what's going on, and anyone can just look at the rules that they follow and see what's going on, which is a very nice property. They're distributed, of course. They can be run around the world. You can operate them from anywhere. And they're pretty much non-stop. It's very hard to stop one of these things. I think, as you all know, Bitcoin has been running quite reliably for, well, ever since it was started. So these decentralized autonomous organizations have a number of very nice properties which make them look attractive in terms of implementing a government. And that means that you could do the various things that you want in a government in a way that was corruption resistant and rule-based and transparent and distributed and non-stop. And that sounds pretty attractive, especially when you look at the way things are going right now in terms of governance systems which are, vulnerable to corruption and don't always follow the rules and are not known for being transparent and have sometimes got a difficult time being properly distributed and are not always non-stop. Governments sometimes have an awkward problem of stopping. Doesn't happen very often, but does happen occasionally. So the question is, how would one go about doing this in a reasonable way? And also, although those are the technical sort of properties of a DAO, how do those technical properties give one an advantage, and how can you build up a more complex structure than what we've got now? What we've got now is called a democracy, and people are very proud of a democracy, although there is a popular statement running around that democracy is the worst form of government except for all the rest. And this is attributed variously to different people, and as near as I can figure out, it's attributed to them incorrectly. But nonetheless, the popularity of this statement seems to be saying something to us. And what I'd like you to imagine is that better than our existing democracy is possible. One of the core issues with our existing democracy is voting. I really mean it, seriously, voting is an issue. First off, there's very little economic incentive to vote. So this has been borne out by quite a few studies where people look at what it is people spend in terms of their time, effort, and energy to vote, and what they get back, what is the expected return from voting. And you don't have an expected probability of getting much, because the probability that your vote influences much of anything is pretty small. There's an even lower economic incentive to determine how to vote. In other words, it requires a substantial input of energy to evaluate what is a good vote. How should you vote given the rather complex arrays of social and economic issues? And then we have the problem that there are sophisticated disinformation campaigns being deployed to bamboozle the voter into voting in this or that way. And then, of course, we have the awkward fact that something like half of voters are below average, so that the problem of bamboozling voters becomes worse in that context. And then, of course, once elected, candidates often behave in ways that are unpredictable. Certainly the promises they made prior to becoming office holders can often go by the boards. Do we have a time count as to how much time I've got? So that makes voting as it currently stands less than ideal. So what we'd like to do is take a page from the wisdom of crowds and steal some of those concepts and mix them in to the whole voting process and use prediction markets. And how many people have heard of prediction markets? Oh, prediction markets. A fair number of people have heard of prediction markets. So prediction markets are an idea which basically tries to aggregate information by using essentially betting markets to let people pool their information. And in the context of what we'd like to do, we'd like to use the prediction markets to figure out what would be a good policy or a good strategy. And we'd like to simplify the voting process so that people are voting in ways that are easier. And the idea is pretty simple. The idea is that instead of having people vote on all these complex issues, which they have a hard time understanding, let's have people vote on something simple, like how well they think government is treating them. And in fact, let's strip it down to the essentials. Every year, people will say how they think the government is doing, and they'll rank the government on a scale between 0 and 1. And this means that what you have to decide on is much simplified, and all you have to do is decide, hey, has the government been good as far as I'm concerned? Rank that on a scale of 0 to 1, and then you add up all of these votes, divide by the number of voters, and you get a number between 0 and 1. And that number between 0 and 1 encapsulates the quality of the governance for that year. Now you can use your prediction market to predict what the governance is going to be, or what the value of the governance is going to be a decade out. And now you can start to ask questions like, if I adopt this policy versus that policy, is that going to improve this metric of governance 10 years out? And now notice what happens if you do this. First of all, Joe Sixpack does not have to make complex policy decisions. Joe Sixpack only has to say, hey, government's doing a good job, government's doing an okay job, government's doing a lousy job, Joe Sixpack has a much simpler task. And from a policy point of view, if you've got a complex policy, the people who are going to try and figure out whether that policy is going to make Joe Sixpack happy 10 years from now can be very sophisticated investors who are trying to figure out how this policy is going to impact Joe Sixpack and how Joe Sixpack is going to decide that this policy is doing. So the people who are talking about Joe Sixpack, or the people who are trying to assess how this policy influences Joe Sixpack, can be very sophisticated. And they can put in a lot of money because they're going to be investing in a prediction market, and they can make money if their predictions about how Joe Sixpack is going to vote are correct. So now suddenly, instead of having Joe Sixpack deciding whether a complex policy is going to be good or bad, you've got sophisticated investors deciding whether Joe Sixpack 10 years from now is going to like the result. So that's a big shift in how you make decisions, and it looks like it's a shift for the better. So this is now a mechanism which can be rule-based. In other words, you can now take this mechanism and you can say, okay, a prediction market, that's something we can put in a DAO. The voting mechanism, that's something we can start to put in a DAO. That's something where people have talked about voting using blockchain, using the mechanisms that we know about, using the cryptographic mechanisms. So those are now things that we can talk about doing, and we can talk about having those mechanisms integrated into a more secure or more reliable system. And now we can start talking about things like, oh, we can replace Congress. And any time you talk about replacing Congress, you're going to have a favorable reception to the discussion, shall we say. People are going to say, oh, that's an interesting thought. Why don't we talk about that further? Gee, that sounds interesting. Let's consider that in greater depth. So by combining prediction markets and blockchains and decentralized autonomous organizations and this simplified version of voting and all of these concepts and swirling them around, it looks like we can have a set of concepts that is going to be very attractive in terms of implementing a new and improved method of building up a democratic system which is more responsive, which responds more rapidly, which allows bills to be assessed automatically and more rapidly, and which in general is, well, as the title of the talk says, the future of humanity is going to be saved, and we're all going to have a happy future in which our governance is much better than it is now. At least that's the hope. So what do we need to do in the way of next steps? Well, anytime anyone comes up with one of these wonderful ideas, the first response is, yeah, okay, it's supposed to be wonderful, what do we do? And the obvious answer is, well, why don't we try it out on a small scale, give it a shot, try it in some simplified form perhaps, and see what happens. And that sounds like it would be a nice thing to do. So how might one do that? There are various thoughts on how that might be possible. One thought would be to try it out in some place where there's very bad governance. Take your favorite failed city, or take your favorite failed state, and implement something and see what happens. The other possibility would be to take your favorite student organization and implement something, try that out, something where the stakes are low and the number of people is small. Give that a shot and see what happens. Another thought is that rather than going for something like that, you retool it so that it's a profit-making organization. and you say, well, what was proposed was something that would be suitable for the governance of a large country in the long term, if only one had suitable details of it. Maybe one could build an organization for a company and do that profitably. How many minutes? All done. Okay. Well, with that, I will say that's the idea. Thank you very much for listening, and hopefully something will come of it.
Beautiful stuff.
Oh, thank you.
Beautiful stuff. Thank you. Looking forward to talking with you more. Do I just walk up?
Huh.
All righty. The lights. Hey, everyone. Santa Monica. Hello, Santa Monica. Oh, good. You're here. I did that in San Francisco on Friday morning to a thing. I said, hello, San Francisco. Silence. And I thought, well, what were you guys doing last night? Then I got all these things about people were up until 3 in the morning doing stuff, and that, you know, giving a talk at 9:30 in the morning is not the best time to do that. So, hey, want to talk about EOS today and tomorrow here. My name is David Moss. I'll be up here for a few minutes. I don't see a countdown clock, so let me do something really quick here so I make sure that I run my time correctly. Please bear with me. And there we go. All righty. So, how many here have heard of EOS? Ooh, that's impressive. Okay, that's really nice to hear. Interestingly enough, I'm going to give you a little bit of, when we're saying today and tomorrow, I'm going to start with a little bit of history here. And part of that is just how I came to be in this particular thing. I'm looking at yesterday first. So my title was SVP of Tech Operations. What that meant at the time was I was hired by Dan Larimer. I actually had a meeting with Brendan Bloomer, the CEO, and they said, and I talked with Dan Larimer on the phone, and I said, gee, I've got a problem with the white paper. And then they said, well, we'd like you to become part of the core team. Can you be in Blacksburg, Virginia tomorrow? So it was a couple days later that I actually went there. And then ever since, that was early August of 2017. And so Dan and I worked on a number of things. I was the first employee there working for him, building out the technology. And I also ran EOS Developer Relations, which meant that I got to see all the deal flow, all the companies that were out there that were really excited about building in the technology. And that was just a marvelous thing to see that kind of stuff there. I left BLOCKCON in mid-May. We were trying to do it a little bit earlier, but that's the time that worked out best. So 2 weeks before the launch. And then I participated in the launch. I was one of the people that helped do it because I was kind of the neutral third party. I wasn't working for or employed by anyone during the month of June, specifically so that I could be a part of that EOS mainnet launch. And it was a wonderful, exhilarating time. And so it was very cool to work on that. And so that was kind of my yesterday. I always do this. This is proof of POD, proof of Dan. So anyway, that's my proof of Dan. This is us in October of 2017. My gosh, it's a year ago. That seems like 10 years in crypto, right? I mean, everyone have that experience? So 1 month in crypto is like a year anywhere else. It's kind of like Inception or what? Actually, there's Interstellar. Maybe that was the movie. I'm confusing the two. Inception. Both, yeah. Alex, you're right, both. Okay, so this is when we were working out all the various components of how you actually we would build out the various things of EOS, working out the timeline and everything. That is Thomas Cox, who is now working with me at the new company, and Thomas is an old friend. We started together. We met each other at Oracle Corporation when we were there. So basically, what was EOS? Well, an operating system. An operating system was needed for the blockchain, at least in my humble opinion, because what Dan had done previously with BitShares and then with Steemit was he built really cool applications. Mark Jeffrey was up here earlier before the break talking about how cool it was that Dan Larimer's projects, BitShares, Steemit, and now EOS, are running so much on any blockchain. Basically, it's some of the most traffic for any transactions on a blockchain. But he wanted to abstract that out. That was his goal. It was really the problem that he was trying to solve was the problem that he had when he created Steemit. Oh, it's all very, very tightly coupled. How many of you guys know what tightly coupled is? Okay, some people. The software engineers and among you, tightly coupled means that it's all kind of squished together like, let's see, like baby food. and it's trying to extract the various parts back out to make something else is really hard. What you want is something more like a sandwich where you can pull the bread off and just eat the protein or something like that. So that was the operating system that he was seeking, and that was what he was looking at EOS. And I remember hearing rumors at the time, people were calling it the Ethereum operating system, and that was just ridiculous because that's the last thing that he wanted to do was actually go out there and recreate Ethereum, which that's what Vitalik did. If you guys know what the story about Vitalik, right, is he said, I have all these cool ideas about smart contracts to run on Ethereum, to run on Bitcoin, and they said, nah, never going to happen. And yes, was it today or yesterday I heard somebody announce that smart contracts are now running on Bitcoin? So eventually they come to the point. So basically, if you can read it down here, it was developed by BLOCKCON as a third generation. I'm calling it third generation. Bitcoin, first generation. Ethereum, second generation. EOS, third generation. Come up and argue with me after this presentation about what you mean by first, second, third. But basically the idea was that anybody can then build applications on top of it. Really cool. I just love that idea. So the source code was released. I was in a hotel room in San Francisco speaking at a conference, the Tulip Conference. Went back to my hotel room and we did the vote, the go vote on getting all this done. There were at least 300 block producer candidates who all were vying for this, who had put in $250,000 to $1 million to want to be a node on the EOS system. There are only 21, so you've got to be careful and make sure that you're getting voted in. Turns out that the voting may be a little bit more complicated than you think, but we were also looking at the time, the token value was about $14 billion. So doing a normal launch of a blockchain, relatively easy. Doing a blockchain launch with people who have never launched that blockchain before, because we'd only rehearsed it internally hundreds and hundreds of times. That made it more complicated. More complicated, there was $14 billion sitting inside of that Genesis block. So we wanted to make sure that we did this very, very carefully. And they're all paid for, by the way. The block producers are paid for by the generation of new coins. 1% inflation, that's what the incentive is. So they're incentivized to keep things moving and make all that kind of stuff work. And so, but meanwhile, in the blockchain community during that time, we had a whole bunch of other stuff that was going on. And it was just kind of a fascinating thing to see. And what we saw was lots of people were raising money. Block One raised, how many people think it's 1 billion? Yeah, 2 billion? Do I hear 3 billion? Do I hear 4 billion? Yeah, okay. It's like, I thought it was 4.14. I've heard that it was 4.4. It depends on how you value the ETH, all the other stuff. I think that's called an S ton of money. So it was a lot. But the idea was the mainnet essentially is delegated proof of stake. I heard I was on a panel in San Francisco yesterday, and apparently Naval Ravikant said, DPoS is experimental. And so somebody in the audience said, I just heard this, and what do you say, Mr. Moss, on DPoS being experimental? I said, blockchain is experimental then, because we're all trying to figure this stuff out. Over the course of the next couple of years, you're going to see a lot of good changes. But we do have geographically dispersed block producers. If you look out there, they're all over the world. It's fantastic. They're running pretty fast, 4,000 transactions a second. Remember, I've heard all sorts of rumors. Visa runs at 24,000 transactions a second. That's BS. They run at 1,700 transactions per second max, and that just works just fine because there's all sorts of different mechanisms and queuing and other things that they do to make that happen. So this was a pretty big achievement. If you think that Ethereum, if you know that Ethereum is running 10 transactions a second. And so looking at that, it's doing a lot of really great things. It's feeless. There's account management. There's a basic template for governance. Okay, that's great. That's today, right? Okay. Let me say work in process when somebody says, okay, it's all experimental. Well, blockchain mainnets, the thing I'm going to start going in a little bit of a rant here now is that IBC is not ready. Everybody know what inter-blockchain communication is? No, you don't. Okay, well, inter-blockchain communication, just a couple people. Inter-blockchain communication is the ability for my mainnet or my blockchain to talk with your blockchain, to talk with somebody else's blockchain. It's being worked on by a couple people. There's a gentleman in this room, I think, that's working on. You're working on that project right now. There's a couple people doing this stuff, and guess what it uses? In the best possible world, it uses stuff from my idol who was just up here a little bit ago, Ralph Merkle. It uses light Merkle proofs. There's a number of different ways to solve this, by the way. There's like 5 different ways that we've seen that we're working on. But Fortune 100s don't like this. I spent a couple of days with 30 top Fortune 100s in June. They all said, EOS, Chew Cowboy, that was a guy from Chevron, but he's from Houston, so he's going to say Chew Cowboy. And then they're suspicious of mainnet privacy. The DoD, when I talked with them, they said, yeah, the Chinese are running EOS. Okay, well, that may or may not be true. You can look at some of the other stuff that's out there. But basically, blockchains are just simply not enterprise ready. Does anybody think they are? Okay, nobody raised their hand. Okay, so how do we get there? The idea is we've got to look at some of the problems there. There's a security and a performance dilemma. I like to talk about something that I learned back when I was at Oracle, the phrase that we always said, and it's still being used today, which is fast, cheap, reliable. Pick two. Okay, so right now we've got a governance quandary out there with all the various governance things. That's what Ralph was alluding to. There's a lot of things that need to happen for governance. It's a very difficult learning curve. I mean, how many in you you can say, I've got a year of C++ under my belt and I'm ready to write EOS smart contracts? Raise your hand. Okay, that's what I thought. So there's a big barrier to entry to get where you want. So basically, what you need to do is think beyond the mainnet. And everybody right now is looking at, I call it a monoculture. Everybody says, I've got to launch a mainnet and get it out there, and everybody uses it. Okay, so that's why I use this particular slide, because why does it have to be one? Why does it have to be one mainnet? A tectonic shift in technology is coming, for sure. But people, I got interviewed just a little bit ago, and somebody asked, well, what do you see over the next couple of years? I was like, well, right now, I've talked with enterprises, like FedEx has a strategy. They're actually working on stuff. They've got a proof of concept. They've got some things they're working on. Intuit is working on some stuff. A number of companies are working on things, but it's all like, well, what do we use? I talked with a gentleman who is the former head of Google development, and recently, last week, and he said, we looked at this stuff 6 months ago, and we decided we weren't going to put it on the blockchain because it just wasn't ready. The governance wasn't there. That was the big one. Over the next 2 years, you're going to see some really interesting stuff happen. That's when people are going to have enough technology there, enough that they can start building actual real working examples, and then blockchains will be used worldwide. Now, the thing is, I'm not sure if you guys are familiar with a company called Opskin/Wax, but they had the biggest transaction platform on Ethereum, and they were running on it, and then this contest came out, and it said, on this contest, if you want to be on our exchange, you need to show how many transactions you can get through Ethereum. What happened? Account cost went up, not account cost, but transaction cost went up from a couple of bucks to $50, and transactional verification took 27 hours. Dead. You're dead. Your company was dead. They lost millions of dollars literally in a couple of days. So you can't really rely on those kinds of things. So people want this to happen, but tech isn't quite there yet. So basically the way that I look at it is permutations. You know what permutations is? Many different ways of doing things. That's what's going to be coming in here. Once we get smart contracts, IBC, and governance and some other things, and we're going to be getting there. There's so many different companies and different things that I've talked with now. It's in the 500, 600 different company range where people are really excited about doing this, but they can't rely on the stuff that's out there. And so one of the things that we believe, and this is why really, like I said, I've got so much respect for Ralph Merkle, is that a lot of the stuff that he was talking about earlier is about governance, blockchain governance. What does blockchain governance means? It depends. For me, it means, can I put into code something that allows myself and this fine gentleman right here to have a smart contract, and if something goes wrong, then there's a way to adjudicate that in a nice, easy way, or if something is wrong with the chain, there's a way to adjudicate it. Does EOS have those things? It has all of the tags and everything else you need to be able to do that, all of the stubs in the code. Does it have all that governance right now? Yeah, no, it doesn't. And that's because it has a flexible open system that allows you to build on that. That's the MIT open source license. And the MIT open source license, anybody know what the MIT open source license is? Okay, it's 3 paragraphs. What it means is EOS is published with an MIT open source license. What that means is the first paragraph says it all. You can commercialize this in any way and you do not have to attribute it back or recontribute it back to the open source code. Dan Laram and I had long discussions about this. We decided that was the best way to publish it because the idea was go forth and multiply. Ubiquity on EOS comes from not everybody jumping onto the mainnet, but coming up with all sorts of other different ways to use EOS, side chains, chains connected that are private, all sorts of other different kinds of things. That's what we see, but until these things happen, guided governance setup, consortium decisions, voting rules, and those things are made real, not just a cool idea, because the EOS Constitution right now, which is written by one of my colleagues, Thomas Cox, that Constitution is just literally written. There is no way for it to be enacted by the block producers or by your smart contract right now. That has to change. It's changing very slowly. He's head of the EOS Alliance. It's trying to vote on a new constitution. We're 4 months in to EOS. Another 2 months, counting up to 6, maybe we'll have a new constitution. There's a lot of things that need to change. The beauty of it is all the building blocks are there right now in EOS and DPOS. And we're really excited about that because we believe that it's going to open up massive opportunities once people start understanding how powerful this software is. Open source software is really kind of the way to go on this, and there's a huge opportunity to build on this and expand on it. And if you look at some of the companies that are doing things in Ethereum, you look at GoChain, you look at Loom and some of the other ones, they use Solidity contracts. They're all ready to go, and you can build anything you already were building in Ethereum, but now you can go 1,000 transactions a second instead of 10. There's some other, it doesn't have some of the basic stuff that EOS does, but it's there, and people are trying to build all that stuff out. So I am building a new team. I've already built a new team. You guys probably saw in the press, who didn't see the CoinDesk article? Okay. Okay. Basically, it was exaggerated. Yes, we did leave. A group of us left Block One, but they were all people that I came in with, and this was something that we had talked with Block One for a while. We wanted to build on EOS and also build a number of other protocols that we're working on right now. We all started somewhere between July and August. We're working on this. We're in stealth right now, but these people, this fine team, and 4 other people were all part of the team that built and designed the testnet, ran the daily activities, did all that work at Block One. And so we're in stealth. We're just getting, we've been actually spending the whole summer just working on software. So I'm coming out of my cave right now to talk with people about it. And the company is called StrongBlock. And we are big believers in blockchain. We're big believers in EOS and all the various protocols out there. And we just want to see this used in an actual use case, so it isn't a rounding error that it comes and goes like string theory. It's like string theory was so cool in physics, wasn't it? And it didn't really predict anything. So we don't want blockchain to be that. We want blockchain to be embraced because we see the future in blockchain. So again, thank you everybody very much for coming out today, and look forward to talking with you soon. My timer just went off, so yeah, that one isn't working up. Yeah, so I timer my phone. I should have put my phone on no sleep, so I had to go there and hit it a couple of times. I need to get unwired.
Do we have some time to talk, or you're busy? I don't know what to
give me some time. I need to get unwired. What?
I have a few questions. You want to go back up?
Sure. Okay. Do we have a break in here? Am I unwired? Am I on?
Back up on the stage. So that block producer thing is very interesting. How can I be a block producer? In terms that they can actually go back, apply, and become a block producer.
The audience like I did at UCLA a couple of weeks ago. So basically a block producer is a node on the chain. In EOS's case, each node is independently run. Block One has no association with them, and they are voted in by the million tokens that are out there. Mark Jeffrey pointed out earlier, there's 548 million tokens staked, the majority of the tokens. Those tokens are then voted. Each vote allows you to vote for 30 different block producers. And so people vote. Actually, the voting takes place every cycle. 12 blocks per block producer. Half second per block, so basically 6 seconds for each of the 126 seconds goes around, and then Yeah, so it goes around, and then each time that happens, you can essentially be voted out or voted in of the top 21. The top 21 are the ones that make the most money, but then they're standby block producers, up to 40 standby block producers, and they're also paid in inflationary EOS tokens.
Right. How is this different from the mining that's happening on the Bitcoin's blockchain or on the other blockchains out there?
Well, it's an interesting, yeah, that's a good question. I think that the way that I see it is that because of the way we're doing inflation, if you're a block producer, it's a clock. It's going all day, and basically every certain number of seconds, you're producing 12 blocks. You get paid by the block for producing those blocks, and so it's a predictable amount. Once you're voted in as a block producer, you get paid a predictable amount, and it doesn't fluctuate up and down. It's exactly the same. The only thing that fluctuates is the EOS token price, because you're paid in EOS tokens.
Is there a scope for people who already have large amounts of EOS that they can vote in a specific format that would only allow certain block producers to always be there? So there's like an indirect correlation that out of the top 12, top 20, there's always going to be top 8 or 9 that are always going to be there.
Well, there are right now. If you look at that, I guess I don't want to go too much into the details, but again, you have large token holders. When we analyzed, we did a read of all of this stuff. There are 300,000 wallets roughly when the Genesis block was created, but 211 wallets held most of the tokens, and then Block 1 has 100 million tokens as well that they're not currently voting. And so it really is those top holders, sometimes between 50 million and 100 million tokens, who are voting a good portion of those people in the top in. That's the way this particular model is set up. Right or wrong, that's the way that it's set up. So it might be that you need to know somebody, or that you're in favor with somebody. There's some block producers that people just really like EOS New York, and they vote them in because, like, you guys are doing a great job. You'd hope that it would be a democracy. In some cases, it is.
Right. Got it. So, well, there's a question. Do you have a question? Did you raise your hand? What's your question?
So, a friend of mine just asked me this morning, they were with another Dan Larimer project, and they go and they looked at the GitHub contributions, and they said they were coming in very steadily until June. Then you left, your team left, and then there haven't been any since. Were you guys the advocates for doing that, and is it still as open source, or is nobody working on the software?
Oh, okay. So the question was, the GitHub contributions dropped down. We didn't have all of the top GitHub contributors, actually. There was another group, and you've probably seen this circulating, called OCI. That was part of my team. I had both an employee and a contractor team. And OCI, when we left, the OCI people were also kind of also leaving around that same time, because they'd done the primary thing of getting the software out. The code is still being developed, as you can see. I mean, if you looked at the newest versions, there's a lot of work. It's a smaller number of contributors, but there is active contribution, and they're also sometimes working on separate branches that they're merging in for each of the different releases. So there is still code activity, and the people that are leading that, Bart Wyatt, who leads it up, and Greg Lee, who's the VP of Engineering that replaced me, they're very actively working on this, and I see the stuff that they're working on all the time. So there's an active work. The latest version has a whole bunch of really cool new stuff in there that we were hoping to have in March, and it's lovely to see it there. So there's definitely progress.
Finally, how can they apply to become a block producer?
Apply. Basically, the way that it was originally done was you'd go out there and you'd announce your candidacy and have a really cool website and say, why you're giving back to the community and how you're going to use the money and where your servers were and all the other stuff. That's part of it, but you have to become known to the community. And so there are a number of different ways to do that. There are several Telegram channels where most of the block producers are there. There's called EOS Mainnet BPs. That's the one that I started back in April or something like that. That's where we do most of the conversations, and then you can talk with them, find out, and a lot of it is you have to go out there and get basically, it's almost like getting a sponsor. You have to get somebody that's interested in putting enough and voting for you. But the top 21 have been fairly stable now for a couple of months, so it's hard to break in, but you can come up as a standby and still get some tokens.
Got it. Thank you, David.
Yeah,
Thank you for clearing it.
Yeah, thanks.
Take care.
All right.
The next presentation, thank you. Well, thank you for David.
All right, you want to?
Next up, we have Professor Yunus. I'm really grateful that he took time out of his schedule and came out here to do the presentation. He just flew in from New York, He's going to give the presentation, and then he's going to drive all the way to TJ and do another presentation there, and then probably fly back to Europe afterwards. So give us a second or so, and we'll have Professor Yunus do a presentation. Thank you.
You guys will take care of you on that side.
No, but it's more complicated. More comfortable like this? Whatever you want.
Why these goals are important in the context of the present world situation. To give you an idea where it all began, I was teaching in one of the universities in Bangladesh, teaching economics, back in the 70s. And this was a period when we were going through extreme economic situation. There's a lot of poverty, a lot of hunger, and we even ended up with famine in the country. So when you teach economics and see the outside world beyond your classroom, going through all this, it raises a lot of questions in your mind. What good is economics if it cannot address all this? So what am I teaching? All those elegant theories of economics that I so proudly explain to my students. Gradually, I get the sense that these are all empty words. It has no meaning, sounds good, but not relates to the life of the people. So the question comes, why am I teaching them? So I was going through this kind of agony that, what do I do? So one idea that I came up to kind of salvage myself, if this, what I teach doesn't work, I have to find out if I can be some use to somebody in some other way, if I cannot go this way. So one way I thought I can do that, why don't I go to the village next door to the university campus and see I can be of some help to somebody as a person, not trained economist or something, just as a human being, people in distress, people in serious trouble, if there's something that I can do for, even for one individual. So that was the beginning, back in 1976. And I keep doing it every day, see how I can be some use to people. Then I learned a lot of things about the village. When you go to the village, same village over and over again, you get to know them very well. So I became part of it. And one thing led me to one particular direction. That was the loan sharking in the village. People give tiny loans to the neighbors, and in the name of the loan, they grab all the things the other person possesses. And the more you see it at a very close range. You see the victims of loan sharking and the person who practices the loan sharking. They are all neighbors. They're not two different kinds of planet. And you feel extremely ugly about the whole thing, how human beings can be so cruel to each other. And again, you feel helpless because you don't know what to do in a situation like that. How do you protect people? Here I'm trying to say that I can see if I can make myself useful, but I cannot make myself useful in a situation like this. And my economics teaching, whatever I have learned in classrooms, never gave me any idea. Never in a form of a paragraph or a sentence, what do you do in a situation of loan sharking? It doesn't belong to that traditional economic theories that we learn. So I had to come up with an idea what to do. The one idea that I came up with, why don't I lend the money myself? The idea is a very simple one. If I lend the money, few people will come to me to borrow the money. They don't have to go to loan shark anymore. So those people are protected from the victimization of the loan shark. Because I offered them a very simple version. I said, I give you the money, you pay me back. No other conditionalities, nothing. So compared to the other part, other option, this is very attractive. So as I started doing it, some people started borrowing from me. I gave the money from my pocket. It's very small money. $2, $5, $10, that's about the size of the loan. And it became very popular. So as it grew, I became very happy because I saw that people are responding to what I was doing. They must be very happy because they don't have to go to loan shark. And it became so big in a couple of years that I thought in order to sustain it, continue it, maybe I should create a bank because it's working. Everything works perfectly, and I'm very happy with that. Why don't I create a bank so that I can continue with it? That's when I came to big, serious conflict with the banking system. Banking system says, no, it cannot be done. And I went to the central bank, I went to the finance ministry to get their permission to set up a bank. Everybody said it cannot be done. So I kept on repeating the need for it and the examples that we have in the village, several villages in the neighborhood. And ultimately, in 1983, we got the permission. We became a bank, called it Grameen Bank or Village Bank, and continued to do the same thing that I was doing before, now more aggressively because I have the bank with me. I created a bank, so money is not a problem. All I have to do is to take the deposit from the other people and lend the money for the poor people. And it became very popular internally, and outside people became very curious how it is done. Everybody asked me the question, how did you design the bank? What is the intricate thing that you do in your banking that it works? The designing part of it, how it was done. You must have done lots of research to do that. I said, no, I don't do any research. I just go on doing things which I think will work out for people. That don't seem to be making them very happy with my answer. So I tried to explain in another way. I said, look, I don't know anything about banking. That was my advantage. Since I don't know anything about banking, I could do anything I want. Nothing is telling me behind my brain that, no, you can't do this. This is against this principle, against that. So I was free. So I used my freedom, my mental freedom. Every time I see an issue that I have to address, I need a new principle, new policy. I look at the conventional banks, how they do it. Once I learn how they do it, I just do the opposite. and it worked. And if you look at the whole Grameen Bank, it's nothing but piece by piece, the opposite of what the conventional banks do. Conventional banks go to the rich. The richer you are, more attractive you are for them. We reverse it. We go to the poor. Poorer you are, more attractive you are. If you are the poorest, you are the most attractive for the bank, our bank. Conventional bank asks for collateral. This is a big issue, the fundamental issue in banking. You must have enough to borrow some from the bank. Since the poor people don't have anything, the question of collateral doesn't exist. Doesn't make any sense. So we dismissed it. Conventional banks want collateral. We said no collateral. So the entire banking system has to be run on the basis of trust. So we created a whole system which works on trust. And it works very well. That's how it became known. Its repayment is better than the conventional banks. You lend money to the poor people, you do that. In Bangladesh context, conventional banks focus on men. We focused on women. So again, reversed it. So today in Bangladesh, Grameen Bank has over 9 million borrowers. Mostly women, 97% of them are women, rural women all over Bangladesh. We work in every single village of Bangladesh, which has over 80,000 villages. So that's where we work. So again, we reverse the conventional bank in that sense. Another basic principle that we adopted right from the beginning when we were a tiny one, people should not go to the bank. Bank should go to the people. So our entire system is based on reaching out to people. They don't have to come to our office. To illustrate that, today we have over 9 million borrowers, as I said, in 80,000 villages. So our staff have to go to all those 80,000 villages, meet all those 9 million borrowers at their doorstep within 1 week, because everything in our bank is a weekly cycle. You make payments in weekly cycles, you get new loans in weekly cycles, whatever is done through that weekly visit. It's rain, shine, flood, doesn't matter. You meet all those 9 million borrowers at their doorsteps. So that again is very different from the conventional banks. Conventional banks are owned by rich people. If you own a bank, you must be a rich person. And particularly it's a rich man who owns a bank. We reverse that too. Grameen Bank is owned by poor people because all the borrowers are the owners of the bank. So it's a bank owned by poor people. And poor women because our borrowers are women. So again, that's the reverse also. So you go piece by piece, you have a whole series of things which is done in a reverse way. But it puzzles everybody. How does it work? Because conventionally, we think that if you give money to poor people, they will eat up the money, they will never pay back the money, and so on. But here it works. So it drew a lot of curiosity from the rest of the world. First, they dismissed this as a hoax, some kind of a gimmick. We invite them to come and visit. They said, look, it's a very open thing. Why don't you find out what is the trick is? After they spend some time with us, they become totally convinced and they want to do it themselves in their own countries. So the idea has spread all over the world. It became known as microcredit or tiny loans. Every time I come to the US, invited by events to speak on Grameen Bank, people will always ask questions, oh, it will not be workable in the United States because it's a very different country than Bangladesh. I said, no, it should be working everywhere. But the simple question is, do you have people who are not reached by the conventional financial system? If there are, then you need a Grameen Bank, because Grameen Bank is to fill up that gap. To my knowledge, half the population of the entire world are outside the scope of the banking system. That's where the problem is. And I try to explain that financial services is like the economic oxygen for people. If you don't have oxygen, you cannot breathe. You cannot function. You collapse. Same thing happens when you do not have economic oxygen. You cannot function. You cannot breathe. Economically, you cannot remain active. You become dysfunctional. I said, because that financial oxygen is not available for the half of the population of the world, that's why they remain poor, because they can't get, that's what we call, when you say dysfunctional, that's when we call them poor. The moment you connect them with the financial oxygen, they become alive, they become active, they become creative. There's nothing wrong with them. Simply that pipeline is missing. So I said, if you have this type of people in the United States, of course they need the same financial oxygen like everybody else. Then some says, well, we have tried it many ways in the United States. Some says we tried it 100 times in 100 different ways. Some say 200 times, 200 different ways. I said, you can do 1,000 times in 1,000 different ways. If it still doesn't work, I said, it's not the fault of the people. It's the fault of the people who are doing it. You have not done it the right way. So I was challenged to do it myself. I said, why don't you come and show that it can be done in the United States? So I took that challenge. I said, okay, I'll do that. In 2008, January, we began our first branch in New York City, in Jackson Heights, Queens. And it became a beautiful branch, 100% replica of Grameen Bank in Bangladesh. It works as beautifully as it does in Bangladesh. We have no problem. Then people say, well, we need more branches here. We need more branches in another borough of New York City. So during the last 10 years, we started in 2008. By 2018, we now have 7 branches in New York City. And in total, within the United States, we have 20 branches in 12 cities, including Los Angeles. Yeah. There are 2 branches in Los Angeles, and the 3rd branch will be opened on 14th. Today's 10th. On 14th, I'll be back on 14th in Los Angeles, launch this branch in Los Angeles. In total, there are 20 branches. If we have this new branch, there will be 21 branches in 12 cities. In Omaha, Nebraska, Charlotte, North Carolina, in Boston, in Houston, in Miami, and so on. We have over 100,000 borrowers by now, all women, 100% women. And we have given, in the 10 years of time, we have given over $1 billion in loan with near perfect repayment record, near 100% repayment record in every single branch. And every single branch is sustainable, meaning that it covers all its costs. So it's not a charity program in any sense. All the costs are borne by the system that we have. Our startup loan is about $1,500. You'll be amazed how desperate people are in all these cities to get that $1,500 to make a start in their life. And before we began, people say, oh, what can they do, people here? In Bangladesh, you can buy a cow, you can sell the milk, or buy some chicken, and lay the eggs, sell the eggs, or grow some vegetables. That's why it works. Here, it doesn't work. I said, no, that's not how it works. People know what they want to do. You can't figure it out yourself. I said, I don't know what they will do. Simply, I'll raise the question, is there something you can do if you had the money? This, of course, we have. So now we have enormous experience in the USA, how people start. People start with hairdressing, very simple thing. Buy a chair in a hairdressing place and supplies, and you are in hairdressing. Suddenly, you are a professional hairdresser. Or you used to be maid in some homes, cook for them, so you know all the cooking. Simply, you don't have a job. So you get the money, you back in the cooking. You make the good pastry, you make the good bread, you make those things, you make beautiful cakes. You sell them. You pass on your business card. If you need to make cakes for your celebrations and so on, give it to me, I'll give you the best cake possible. When they get good response. One used to work in a house cleaning service. She lost her job because she was sick. She got well, but she doesn't have a job. So she joined Grameen Bank. She said, I know what to do. All I need a little machine so that I can do the cleaning instead of my hands. So she got into home cleaning business with a business card telling them, I can do better than the service that they provide because I used to work for them. And it will be half the price because I come by myself. Now many of them are hiring extra people because the business is expanding for them. Taking care of pets, another very attractive business, dogs and the cats and so on, such a flourishing business. I said in Bangladesh, we'll never think of such a business of dog walking, but this is it's a business here. So everybody finds out how to do that kind of thing. So that idea of microcredit as it expanded in the United States, we have, as I said, in the first 10 years, we have given over $1 billion. Now we are planning to do it the next decade, next 10 years, to increase the number of branches from 20 to 40. That's a very modest kind of idea. By the time we do that, we'll have 250,000 borrowers. And to them, according to our projections, we'll be lending $11 billion in the next decade. So what a change from the first decade, first 10 years. It took 10 years to build up first $1 billion loan. In the next decade, you're actually lending $1 billion per year in a very modest expansion. You can expand it to 100 branches, 1,000 branches, it doesn't matter because each branch is independent. So it's not that you collapse. That's how we did it in Bangladesh. Each is a profit center. You make it happen. And each one follows the same procedure and makes it self-sustaining. So I got into this debate on the financial system itself. And that led me to many other issues, which I'll quickly share with you. But as I was doing this microcredit in Bangladesh, as I come closer and closer to the poor people, I see many problems with the poor people, besides the loan part of it. Healthcare is an issue. If you are poor in health. It goes together. Your children are poor in health, skinny, malnourished children. So our attention is focused on healthcare. So we created a huge healthcare program as a health insurance program. And it works beautifully, self-sustaining. We provide all the healthcare to the poor people independently. We have doctors, we have nurses, clinics, all coming from the premium that we get from the insurance program. The same idea, we started using it in New York City because America has the same healthcare problem. Before the Obamacare, there were 47 million people outside the healthcare system. After Obamacare, it came down to 18 million people outside the healthcare system. The people that we work with are among those 18 million people because they are the lowest people in the country. So we created our own healthcare system in New York City in one branch to try it out, whether we can make it a self-sustaining and make it happen, independent healthcare system for themselves, run by their own money. And it's doing very well for the last 3 years now we were working there. So what works in Bangladesh, we bring it to the United States, microcredit, healthcare system, and so on. And then it went into many other issues. Like Bangladesh doesn't have electricity in the villages. 85% of the people live in villages of Bangladesh, but no electricity. 22 years ago, we decided, why don't we bring electricity to the villages of Bangladesh on our own? Try it at least. So we created a company to bring solar energy in the villages of Bangladesh. Everybody said it's never going to work in Bangladesh. Solar energy is a very frontier technology. You cannot bring it to Bangladesh. It's good for North America or Europe or something. I said, no, this technology can be used anywhere. It doesn't matter where you are. So we created that and started selling solar home system, explaining to people how good it is, how better it is for the turning from the fossil fuel kerosene to green energy, etc. But didn't get much response. People found it very expensive and so on. So we came up with, we didn't want to give up because we thought we didn't know how to sell it. Idea is good, but the marketing is not right. So we came up with the idea and used it. What we do, we go to the village, and when we go to the village, we ask the people how much you spend on kerosene. After all, you have your kerosene lamps. You must be spending some money on kerosene. How much do you spend each month in kerosene? Everybody knows that. The deal we gave them, you give me the kerosene money every month. You don't buy kerosene, give the money to us, we give you electricity. Every month, you do that for the next 3 years. After you have done it for 3 years, you don't have to pay a penny to anybody. You don't have to buy kerosene, it's all free now. In other words, our money will be paid back in 3 years. People love that idea. 22 years later, we have now 4 million homes in Bangladesh with solar energy. So we created hospitals, we created many other businesses. We have created more than 50 businesses in Bangladesh to solve problems. Every time I see a problem, I create a business to solve it. That day I saw the problem of electricity, I create a business to solve it. I saw the problem of healthcare, I create a business to solve it. But these businesses are different than the conventional business we are all familiar with. That's what created a big debate with me. Is it a really business? Maybe you call it a charity. I said, why should I call it charity? It's a business. But it doesn't have the essentials of a business. I said, what is the essential of business? So you have to maximize profit. I said, is this what the business is all about? To me, business is to be self-sustaining. It runs by itself. You don't have to bring things from outside. You create an organism which functions by itself. And this is what it does. No, this is not what people can do. I said, why not? You don't take any profit out of business. I said, yes, it's my decision. If I don't take profit out of my own business, is there a law in Bangladesh that I'll be put in jail for that? I said, I don't see such a law. So I don't want to make money. I want to solve problems. So my full concentration in solving problems, not making money. I say, I remove the whole profit motive from my business. My motive is to solving problem. That's another motive. So no. If you take away the profit motive is the incentive in the entire world for business. So you are taking away the profit motive, business cannot function. I said, I agree partially with you, not fully with you. Profit motive is a strong motive, incentive in business, but not the total incentive. It's not the only incentive in the world. There are many other incentives in the world. Then they asked me, what is the other incentives? I said, well, to me, probably I'll put it this way. I said, making money is a happiness. That's why it's an incentive. Making other people happy is a super happiness. That's an incentive too. So I like this incentive. It's a super incentive for me. I like it. Then I got into this debate. I said, you know what? The whole economic system is based in a wrong premise. That's why we are suffering from all these confusions. In the whole economic system of capitalist system, human being is misinterpreted. It is interpreted as someone who is driven by self-interest. So only thing economic system recognizes is self-interest or selfishness. I said, but real human being is much bigger than that. Real human being has both selfishness and selflessness. So that's where we went wrong. As a result, the whole world became driven by self-interest because that's the only thing which is recognized by the theory, and we follow the theory. So theory has put glasses on us with dollar signs. We see the world with dollar signs. We cannot see anything else. I said, if we come to close or a real interpretation of a human being, I can say it's a combination of selfishness and selflessness. But the system says, no, if you want to be selfless, you go into charity, you become a philanthropist. I said, no, why should I go to philanthropy? I can stay in business and be selfless. I can create selfless business. So distinction between the two, the way I explained. I said, in selfish business, everything is for me, nothing for others. In selfless business, everything for others, nothing for me. It's a choice. Nobody's forcing you to do it. I like it, so I do it. If you don't like it, you don't have to do it. But the economic system doesn't allow you the choice. That's where we went wrong. As a result, we created an economy which is now in a disaster path. The way we are proceeding, we are heading for a big disaster. It's a kind of a time bomb right now. Because the system is a kind of a mechanism of wealth concentration. All the wealth gets concentrated fewer and fewer hands. 100 years back, 50 years back, we didn't notice it because the speed was so slow. Now we notice it because speed is so fast. Everything is going in one direction. 4 years back, there are 265 people in the world who own more wealth than the bottom 50% of the population at that time. Today, only 8 people in the world who owns more than 50% population, what is owned by 50% bottom population. When we know them, all these 8 people who own more, in totality own more wealth than the bottom 50%. What will happen next year? Next year it will be worse. 2 people, 3 people will be owning more wealth than the bottom 50% because the concentration of wealth is becoming faster and faster and faster. So we have huge mushroom of wealth for few people. And then the stem of the mushroom is becoming thinner and thinner, which is the wealth for the rest of the world. That is not a sustainable world. So unless we rethink about the whole idea, we will be up for disaster very soon. And that's the path we are taking. So I try to remind that we need to do that. How does social business work in it? The business that the selfless businesses. If we are in a selfless business, then we don't have any dividend for ourselves. It's a non-dividend company to solve human problems. So that's if you create more and more of those, more attractive, more contribution it does to slow down the wealth concentration because you are not taking dividend out of it. While we are doing the social business in Bangladesh, many people from outside the Bangladesh became interested in it. One is a big company, Danone, in France. They became very interested in our concept. They say, we want to create a social business. After long discussions, finally we created a joint venture, social business with Danone, to solve the problem of malnutrition in the country. Children are malnourished. So we produce a special kind of yogurt, put all the micronutrients in the yogurt, vitamin, iron, zinc, iodine, and all that, in the right proportion. So that if a child eats this yogurt, get the micronutrients back and becomes healthy child. And make it very cheap, because when you're in a social business, cost of production will go down because you don't need any fancy frills, attractive gimmicks here and gimmick there. You come to the basics. So you make it very cheap. And people enjoy it. Children are eating it. It's popular yogurt for children. And children are coming out of malnutrition. Then other companies became very interested. Uniqlo from Japan. They want to do social business with us, so we had a joint venture there. Now we have joint ventures with many companies, because every company wants to create a social business. This is what I tell you: continue with your company, what you do, but on the side you can create a social business to solve the problem of the people, otherwise you'll never get that. I said what the economic system has put us glasses with dollar sign, as I was explaining. I'm trying to put this glasses a little bit change. I said, I'm giving you bifocal glasses. You see the dollar sign and also see the people sign. So you choose whichever you want. There's nothing about compulsion that you have to do it or not do it. If you feel that you have the capacity to do it, you can do that. This is the direction we can do. So now the young people are getting interested in the social business. We have more than 60 universities around the world who has social business centers in the universities, teaching social business to the young people, create social business ideas, and so on and so forth. I got into another problem in Bangladesh and led to another kind of direction. All the 9 million borrowers, the women and the men that we have, they are all illiterate. They cannot read, cannot write. At early stage, we decided we want to make sure that children do not repeat the history of their parents in literacy. So the children will become literate. So we make sure all the children of Grameen families go to school, have a good education. And we made it happen. And we give them scholarships, we give them education loans, because it's their bank. So we want to make sure that next generation all become literate and educated. So we have thousands and thousands, hundreds of thousands, millions graduates, high school graduates, college graduates, university graduates, doctors, engineers, out of those illiterate families. Then problem began. They keep complaining, what good is this education, because there's no job in Bangladesh, no job. Then I had to respond to that. How do we answer that question? One way I tried to answer that, and I continue to pursue that path, I asked them, why do you look for a job? Forget about job. Job is a very obsolete idea. It's an old-fashioned idea. Came from the wrong thinking from people. You tell yourself again and again, I'm not a job seeker, I'm a job creator. I'm an entrepreneur. And act like an entrepreneur. Think like an entrepreneur. Don't think like a job seeker. If you think like a job seeker, you feel small. You are at the mercy of other people. If you think like a job creator, an entrepreneur, you feel big. You feel tall. And that's how your beginning would be. They keep saying, oh, we don't know how to start a business because our schools never taught us how to start a business. They taught us all kinds of things, nothing to do with business. I said, look at your mother. Your mother joined Grameen Bank 20 years back, 25 years back. And she stood up in her village to take a loan from Grameen Bank of $20. And she took that loan of $20 to start a business. So that's what her beginning was. She didn't say that I never been to school, they didn't teach me how to start a business. She responded as natural as it could be. I said, you know what is the difference between mother and you? Your mother is a natural human being. She acted in a very natural way. She didn't worry about whether school taught me or school didn't teach me. She thought this is an opportunity. If I had the money, I could sell that, I could produce that, I can make money and take care of myself. But you became an artificial human being because your school taught you how to get a job. Job is not a natural thing for a human being. Entrepreneurship is the natural thing for a human being. And when we were in the historical development on the planet, as we grew up in this planet, we are not looking for jobs. When we are in the caves, we are not sending job application to anybody. From cave number 5 to cave number 10. We just went ahead and did our thing. We became hunters, we became gatherers. As we progress, we became farmers. That's our history. Entrepreneurship is in our DNA. And that's what the creativity comes from. Creativity is about solving problems. And that's what we are. Every human being is packed with unlimited creative capacity. Now, job cuts down that creative capacity because you are put in a slot. Slot doesn't allow you to use your creative capacity. Job runs by instructions. It doesn't allow you to be yourself. So why should you give up your creativity for the sake of making a living? Why don't you become an entrepreneur? So I tell them, why don't you go back to your mother and learn from her how to be a natural human being and come back with a business idea. Once you come with a business idea, like your mother did, here we are, we have a social business venture capital fund. We become an investor in your business. You run your business, we are the investor in your business. You make it successful, you return the money that we gave you. We are not interested in your profit because social business doesn't take any profit. We are very happy to get the money back to invest it to somebody else so that they can become an entrepreneur by themselves. That's the direction we have. Now that idea is spreading. Thousands and thousands of young people come with business ideas. We keep on investing in these businesses to become entrepreneurs. They didn't think that could be entrepreneurs. Suddenly they find out that they can be good entrepreneurs than anybody else. Now these ideas being sought after by other countries because unemployment is everywhere. Unemployment is in Europe, unemployment in Asia, Africa, Latin America, everywhere. I said, this is wrong thinking. The whole problem of unemployment is created by the concept of employment. If we didn't have the concept of employment, there is no concept of unemployment. How can a young person, creative, energetic, educated young person sit there, do nothing, and say, I'm unemployed? It doesn't make sense. They have so many options, particularly these days in a time when all the technology is in their hand. With those technologies, they can do something fantastic, which never existed before. But they don't do it because I'm unemployed. They will rather march on the street, give me the job. I said, that's not the path to go. So this is another direction that we keep reminding that human beings are entrepreneurs. This is the direction we want to take, and so on. And the other problem that worries me that I want to share quickly as I'm going through it, the problem of environment. You're all familiar with environmental issues. That's not what I'm going to say. It is the urgency of the situation, which as if people don't are familiar with that. We have, if you want to keep the global temperatures to 1.5 Celsius, we have to get it done by 2040, which is about 20 years from now. So we have a window of 20 years to get things done. If you want to be a little bit relaxed, say, no, let's give some more time, it's a 2050. You have to bring it down to 1.5 degrees, or 2 degrees Celsius from 1.5 temperature. But you are gradually coming close to the point of no return. So you can't do anything. That urgency is completely missing. We've realized that there is a problem, but as if somebody will take care of it. So this is another direction that the world is heading for, a kind of a very small window of time. In 20 to 30 years, we have to get done the things that we have done for centuries, all the problems that we have done. The last one that worries me about the technology, which you are very much involved. particularly one technology I will mention. I keep repeating that technology can be a curse, technology can be a blessing. It depends on what we want to do with technology. If you're not careful, technology can easily go into curse direction. And I see that possibility in artificial intelligence. Although I hear about artificial intelligence, all I read about artificial intelligence, it will replace people. It will replace people in a massive way very soon. It's already started the process. We talk about the autonomous cars, autonomous trucks, and factories, autonomous factories. So it's not just a simply few people will be losing jobs, they will adjust themselves somewhere. It's a massive way. What happens to those people who lose their job? Here we have a case of unemployed young people not having a job. On top of it, you're now adding the problem of people who had the job now out of job. And people say, no, artificial intelligence is a fantastic thing because now we are coming to a stage of ultimate glory of human being. Machine should work, human being should enjoy. And that's what we are coming to. I said, that's fine with me. But who is going to feed those people who are enjoying? Somebody has to feed them. Then they add, oh, we should be introducing universal basic income. Government should give them the money so that they can have the money to have the food on the table. I said, after all these years of human progress, do we come to a level where we become a world of beggars, that we live on other people's doles, that we cannot do anything? I said, I don't see that as something that I accept. Human beings are supposed to be able to take care of themselves and take care of the rest of the world, each one of us. Now you're saying that we don't do anything, somebody is going to feed us? I don't want to be part of that society which creates an enormous group of people doing nothing and staying in somebody else's charity. So if that is the direction, I think this is a direction of curse. Artificial intelligence can be a wonderful blessing if we put it on the other side, solving the problem of healthcare, solving the problem of education, and many other things, putting in that. The moment you want to be greedy, you want to reduce the cost of production by putting machines, replacing human being, making your bottom line bigger, here on the path where we create this immediate crisis in the whole world. So these are the three issues that worries me, which way to go. And ultimately, we have to redesign the things that we already have been doing. But just being focused on only one direction, maximization of profit or profit motive directed civilization that we have to come back and rediscover ourselves as a human being. Not only we are selfish, also we are selfless, and we can do it as a business to solve problems. All the problems in the world can be solved in a sustainable way, unlike doing it in a charity way. A charity is a wonderful thing, that I'm not denying that, but charity has a limitation. Charity money goes out, does a great work, but money doesn't come back. So you have only one-time use of your money. As the same thing, if you can design it as a business, a social business, money goes out, does the job, and comes back. Then you can use it again and again and again, infinitely. It becomes very powerful. That's the power of the social business. If you have that idea into your mind, you can go on, do that kind of thing. So that's the direction that we are. So these are the issues that I have been raising in this book that I just mentioned, that published, A World of Three Zeros, and saying that it can be done. But if you follow the old path, old roads that we all familiar, the kind of life that we live, we always end up with the old destination. Old destination of wealth concentration, old destination of joblessness, old destination of poverty, and other issues related to that. If you want to create a new destination, where there is no poverty, there is no unemployment, there is no problem, threat to the world, then we have to build new roads. Old roads will not take us to the new destination. New destination needs new roads. Thank you very much. Thank you.
Thank you very much.
Thanks a lot.
Appreciate you sharing your incredible insights and valuable time with us today. I have just one question.
Go ahead.
Relates to your last point, and then we can get a couple of questions from the audience. As far as technology goes, a lot of the people here are working on projects, very technology-focused, smart contracts, trying to automate things. How important has community and the human element been in the success of Grameen Bank? Do you feel that that success could have been automated?
One is to success to be automated, and another thing is to bring technology to be success. These are two different things. Already success is done. You're simply simplifying it, easing it. That's also good. But you can make fundamental things. You can change the whole world differently if you put your mind in solving those problems. That's the power of technology. Today, the drivers of technology, I would say in broad way, there are two drivers of technology. One is the money makers. They want to make money by using technology, designing technology. And it is war makers. They want to fight wars, make it more sophisticated, kill more smoothly, cheaply, etc., more devastatingly. So these are the two drivers. The social driver is missing. So that's what I'm proposing. Those people who are doing it for money making, they can also be social driver. Same person. I'm not talking about a different group of person. I'm saying you have that power, but you're not using it. Use that power, suddenly you see the world will be different because you use your mind in creating a technology to solve all the problems that you have listed in front of you. Each one of them is solvable. Simply, we are not paying attention because we have the dollar glass in our eyes. That's all.
Thank you. I think that's a call to action, certainly for this group, and hopefully this movement of blockchain and alternative currencies may make a difference. Time for two questions. You've got your hand up here.
Hi, my name
Hello.
is Nicolette Rankin, and I've been studying your work for the last 10 years. I started the first microfinance program for World Vision International because of your work, so thank you for that. My question revolves around credit delivery systems. I don't believe, I agree with you on universal income is not going to generate the most value for the world. What is your thought on income share pricing or income share value-based economies? There's a lot moving in the education space today.
Somehow I can't understand the question part.
It said, in education financing, there's a form of financial structure called an income share agreement. And the income share agreement allows someone to pay for tuition with a percentage of their income for a set amount of time. So it's a new credit product. Have you done any work around income share agreements with education? Could you talk a little bit about income sharing or income-based economies? Anything in that realm?
All are possible. This is nothing impossible. It's a question of the purpose. Why do you share the income? Is it to make money for yourself or solving problems of the others? Everything is okay. Simply I was saying that the purpose can be different. Technology is okay. What is the purpose? Education is okay. What is the purpose?
To create a new form of credit.
Absolutely. So that's the direction. Like we create a lot of education institutions as a social business. No intention of making money, but a sustainable thing so that people get their education in the right proper way and so on. Health education, nursing colleges, medical colleges, hospitals. We do that as a social business. So that is self-sustaining. It's not dependent on charity. We are not going fundraising every year. That's one thing is finished. We don't do fundraising. We generate funds ourselves. As a business, we generate funds. So it becomes independent. You can plan things. When you raise funds every year, you cannot plan things. You don't know how much money you'll get. Everybody remains nervous. Can we continue the same size, same people next year? Because of the money coming in. So you spend more time in raising money than doing the work. So this is the problem. So instead of in the charity way, we try to translate it in the social business way. That's the only thing we're doing. Thank you.
Thank you. One more question.
Hi. Fascinating talk. I'm Howard Marks. My question is, how did you work with the regulators, especially in Bangladesh? Because I have to imagine there's corruption, there's a lot of red tape, a lot of heaviness, and you're coming with some bright new ideas that are simple to explain, and yet you're faced with these government and these local government and the corruption and the power struggles. How did you overcome that?
Well, the bureaucracy is difficult because their job is to go and scrutinize and remind you that you cannot do this, you cannot do that. We have problems both ways. We have problems in Bangladesh with these regulators and people who are involved in it. Also in the USA. For the USA, for example, your American welfare law. In many states, welfare law is built in such a way, if you earn $1 during the month, you have to report it to the welfare authority. And welfare authority will deduct it from your dollar. So the question is then what is the fun of earning the dollar if you deduct it? So there is no incentive in doing that. Not only this incentive, there's an extreme disincentive in earning any money. So you sit there and wait for the check. I said, if I was designing that regulation or this little rule, I would have designed it completely differently. I said, yes, if you earn $1, you have to report to the welfare authority, and welfare authority's responsibility will to match you with another $1 because you earned $1, so that you feel incentive in earning more money, so that you get out of welfare, as if welfare is designed to keep you in welfare. They don't want you to get out of welfare. So these are the kind of mismatch in thinking process. Same thing. In Bangladesh, we ran into a problem with microcredit. They want to regulate it through the central bank. The central bank is our regulator in Bangladesh. A banking regulator is the central bank. I said, that's very funny, because the regulator doesn't know anything about microcredit. They only know the conventional banking. So they will bring the conventional banking regulation experiences, rules to apply here. Here I'm saying it's a completely opposite thing. I tried to explain to them, I said, it's like football. I said, there is a European football, there's an American football. Now you are hiring coaches from American football to guide the European football. I said, it will be a disaster, because he doesn't know anything about the European football. So same thing happens. So I said, our job is to create a separate regulatory authority for microcredit. After years of this lobbying, finally government agreed, created an independent regulatory authority for microcredit, who understand what we do, how we do, why we do, etc., etc. So that's very clear. So the laws become a problem, how to negotiate with each other, because they don't understand each other. That understanding is very important. We are not saying all the microcredit is sane, they do the right job. No. But somebody has to know what is right, what is wrong. And then you can apply the job. Thank you. Thank you.
Great questions. Thank you again.
Thank you.
Anybody else who has questions? Professor Yunus is going to be around for another half an hour to an hour on the floor. So hopefully you may be able to engage in there.
Thank you. Thank you very much. Okay. Hello. Hi. Thank you. Thanks a lot. Thank you. Thanks a lot. Okay. Thank you. Can you get this out?
What do you guys think about that presentation by Muhammad Yunus? I think there were a couple of ideas we can definitely take home and try to apply that. What I was going to ask our next speaker, Diego. Diego is in Argentina and he runs Rootstock. Is there any micro-lending program in Argentina, Diego? Yeah. Yeah. Right. Or come out of it. Right. Got it. All right, I'll let you have the stage, and if you don't mind, speak a little louder because people in the back cannot hear you. All right, thanks, Diego.
Voice to our societies, but there's something that Internet of Information couldn't change. That is how we transfer value. Value until Bitcoin was always transferred through intermediaries. So in our vision, Bitcoin is the foundation of a new internet for the transfer of value. But if you think about how we transfer value, we are not only storing or transferring value, we set agreements in those processes. Even when we buy something, we have an unspoken agreement that there will be an exchange of a good for money. We don't make that agreement formal, but even in the very basic exchanges of value, there's a tacit agreement, an implied agreement that, if you get a good or a service from me, you will give me money back. So the RSK vision was how we could extend